hasn't happened in 28 years. The United States government is spending its money to save another country's currency.
Here's a quick look at the yen as Japan and the US warned of further coordinated action in FX markets. That's after confirming their first joint intervention in 15 years to lift the Japanese currency from a near 4-decade low. President Trump, for his part, earlier said the joint intervention was a signal of Washington's friendship with Tokyo.
We have a good relationship with Japan. We're very strong, very, very strong financially. And they have a weakening yen. They wanted a little bit of help, and we're always there for Japan. Japan's been very good to us, with the exception, of course, of Pearl Harbor.
Now, the most interesting part about this story is how the world found out about this. See,
yes, I'm fascinated. I am fascinated. All right. I don't know if I'm live. I am live. Okay. Sorry, everybody. I've been actually working, and I want to go through everything. I promised to be showing you things and trying to keep you interested during August. Railtown, we're now at 23,745,000 shares, 23,745,000 shares. You guys are amazing. It's taken longer than I thought, and I was thinking about an investor who really wanted me to, I think he wanted me to give up on it, or the question was, when are you going to give up on it? And I said I couldn't. I think, I forget my exact answer, but essentially I couldn't, because the price isn't the problem. But then he said, you're not hearing me. But I was remembering, I think the price was around 42 cents, give or take. And I remember waking up, processing that. I think I woke up the next week, maybe. And I thought, you should let them know that, go ahead and sell, he might be right. Because it was, it was tax season, there's January. But as fate would have it, that day, the stock did break down. I think it went to 27 cents. So I didn't get a chance to suggest that. And, in retrospect, to play the I told you so game, as an investor selling sort of that November, December, whenever you can look at the chart, but an investor getting out at 42 cents and buying now, what an amazing trade. But, that's hindsight. That's looking back with perfect vision. I would suggest there were places that money could have gone in the meantime and just evaporated in your GDCs, your ZJYLs, even your fingers. So hindsight, you can see things more clearly. But one advantage of our last 8 months is we've been able to build this position. And my answer is still the same. I can't give up on Railtown just based on the price. I don't think the price tells us anything about the company. Now, there's people out there that will argue that my, I'm not an attorney, so I haven't been trained that the only thing I'm allowed to think about is what is entered into the court's evidence, and the judge has allowed it. I'm basically allowed to look what's in front of my eyes, and if I know this, this, and this, and that, I can assume what's going on in the middle. And I think the price of Railtown has been for a year, over a year. It's been part of the combine of picking off half a penny, a teeny weeny yellow polka dot bikini bit of a penny, hundreds, 1,000 times a day. And we don't know about it because it's all done in the, I don't know, this so-called internalizing of orders and in the dark pool, and they true it up afterward. But it's a lot of money. It's a lot of money, and they've driven the stock down. Now, in fairness, there hasn't been any revenue. So you can argue, what is the market cap of Railtown today? It was, it's roughly 40 to 50 million in the United States, but let's look at it. It closed at 24.2. It was up in the green, 75,000 shares, $51.63 million market cap, which, and I'm not picking on anything, for a long time, Finger was much higher than that. And, Finger had 25, 30, 35 million in revenue. Railtown didn't have any. So I can get that other side of it. But I don't think any of that thought went into the price. I think the price just got churned. And we are lucky that there's no toxic financing there. There's no big hedge fund dedicated to stealing the whole market cap. But that doesn't mean that there aren't these servers with the algorithmic sell programs just going and going and going and going. And when you match that up with the fact, a pedantic argument, is it a quiet period? Corey says it's not a quiet period. Well, okay, technically it's not. Technically, it's quiet periods are for earnings, and therefore, I guess bidding on baseball players, and they're also for when you're involved in corporate action like a merger or an acquisition. So it's the wrong technical word. And apparently in its stead, people use the word like blackout. But there's no question that up in Canada, something's been going on with AI and Carney's program that is just keeping information, it's not flowing. It's not flowing. I think it was a big news announcement in July that they've moved, just to summarize it, they've moved from R&D to commercialization, basically. That's what it was saying. They've hired this huge firm to penetrate the Canadian enterprise market, which is not a big market, of course, but it's a proof of concept, and it's bigger than all but, I don't know, 19 countries in the world, maybe fewer than that. I didn't look it up, what Canada's economy is. But there's very little penetration in the enterprise markets, and this is what this new marketing firm is going after. Yesterday, who was it? Was it T. Alex? Pointed out that there's a $300 million fund. I don't know if you recognize what T. Alex was highlighting, but that fund is set up to subsidize. I forget the exact words, but to subsidize Canadian AI companies' cost of compute. That's a pretty major thing. You've got 200 companies in the AIP partners who are spending money on compute, probably in the United States. And if, was it 2/3 or 3/4? I can't remember. But if a significant portion of that cost is going to be subsidized, what the heck? Move. And then Railtown gets a split of which part? The total cost, not the subsidized part is paid for by the government. Anyway, that was a big announcement. I think you're going to see news on both the small and medium enterprises in September, October, November, December, and onward from the service-led campaign. But I also think it's possible that one of the reasons for the blackout has been this government funding, which at some point, even in Canada, things happen. I don't know how they run a country up there. Nothing ever happens, but eventually it does. Maybe that's September, October, November that we find out about government funding. And wouldn't it be something if Canadian government and provincial funding helps fund Railtown either directly or via its partnerships? Wouldn't that be something? We've been waiting all this time. And then the big thing is these data centers simply cannot perform without the inference layer, the orchestration layer, the governance layer, the observation layer, the what do you call it? Auditing, I guess, or auditable layer. The ability to react in milliseconds to stop hallucination or loops of spending tokens. All of that is Railtown. I'm not saying Railtown is the only group doing it, but as far as I know, it's pretty much, I can't think of another one that you can buy in the public market. You can buy Google and get the benefit of Google's ADK. You can buy Amazon and get the benefit of whatever they've created. You can buy SpaceX. They just bought Cursor, which isn't a perfect comp, but they paid $60 billion for Cursor. But you could go participate that way, or you could try to get into a fund like Sequoia, or go to your broker. They might as well be an insurance salesman, and ask her, do you have anywhere you can allocate my money in a managed account? Oh, yes, sir. We have the newest Apollo AI is the greatest, and AI is the bestest, and AI for everyone is our aim, and the AI is fairest in giving returns if it runs through an Apollo fund. Bust Trust 2026. Why don't you put your money in there? Well, those already have, though they've already marked up, and a lot of the pricing is, I think, a circle jerk, but they've already marked it all up, and they're getting your gains. They're charging you every year, and that's how you could participate in the orchestration layer, if we limit the name to that. I read to you the other day, I think it was a week ago, that private equity, the exact quote was, private equity is hoarding these companies. Now, how many are there? I think, in fairness, it seems like there's a couple of dozen of them, but there might be more. So Railtown isn't the only one. But I do stand by that Railtown, I guess I'm kind of adapting to it. I always thought Railtown was first. I still think they were. But they certainly did. It's Canada. They didn't get out the way Langchain did, or I don't know when Vercel started. But these are private equity funded, and the propaganda, the news that goes with private equity, is helping give the impression that they are the bee's knees. Why? Because private equity wants an exit for their investment. They're going to stuff Langchain at 10 or 20 or 30 billion either into your retirement accounts or into Meta. They'll go talk to Zuckerberg and he'll write a check. But they got to get that promotion, the glossy, the talking it up. And it's, they have Fortune 500 customers, and and even if the product doesn't do it, just say it does it, because everybody's buying everything to own the orchestration layer. So I don't know how that's going to shake out. I have no expertise to be able to tell you if Langchain is better than Railtown or not. I believe Railtown is better than Langchain, but who knows? But you know what? It doesn't matter, because the car market had room for the Volkswagen, the Pinto, the Fiat, the Gremlin, and the Yugo, and the Zhiguli. There's plenty of room for all that. And then, of course, there's plenty of room for the Jaguar, the market that they didn't destroy by going woke. Mercedes, Lexus, whatever happened to the Infiniti? I don't know. Cadillac. There's room for a lot of participants in a large market. And the core, unless humanity is going backwards and it's going to just shut down all agents, and governments aren't going to use AI, for example, for defense, for drones, for these little ships that can run on the ocean and sink an aircraft carrier, or these items even that can sit at the bottom, I guess, of shallow water, and when there's a vibration, send a either defensive or offensive weapon. And you don't need humans. There's robots. There's going to be the dogs, literally the dogs of war, all run by what? AI. Are we going back? Maybe. I guess that's a risk, that when AOC is president and Kamala is, or maybe Kamala will be the president and AOC will be the vice president, maybe they make a law. No more AI. We're going to go back to rotary phones and waiting in line, getting a chit, waiting in another line, and we're going to turn this back to the way it was 100 years ago. Well, maybe that's possible. I submit to you that's not what's going on. The headlines scare you, I think, on the wrong things. I personally believe that private credit, even more than private equity, particularly, you can see their actions. They fobbed the risk off into these insurance wrappers, these annuities. And literally, the fees up front are incredible. Incredible. But then the annual fees are incredible. And somehow the corpus that's left over after everyone ravenously gets paid up front, these annuities are like going to a whorehouse. Money on the dresser. No money, no honey, if you can call it honey. Pay up front, or like going to a therapist. You got problems? It's like Rodney Dangerfield said. I forget how he said it. I told my therapist that I'm really down, I'm really depressed, and I'm having suicidal thoughts. He told me from now on I got to pay him in advance. Well, that's these private equity and these insurance annuity type wrappers. Everybody has got to get paid in advance because they're so great. They come to you with their glossies and the perfectly presented, this is for you and this is what it's going to be. So they take 10 or 15% out right up front, maybe more. And then they take 2 to 20% out every year. And somehow you're going to get 25, 30% per year returns. I think this is the part of the market that's going to surprise people. I don't know when. We listened as we turned on here. We heard a bit about the yen. I think the bond market is starting to show the uncertainty of what I believe, and I'm no geopolitical strategist either. I'm just washed up, as the guys told me yesterday. But I think the biggest foreign policy blunder in the history of the United States, and that's a big statement. I think when I voted for Donald Trump, but when Donald Trump came in, he met with Putin in Alaska. He could have gone down. He would be on Mount Rushmore if he had taken that seriously, shaken hands and said, I forget the word for friend, Bruges, Очень человек, just said, we can work together. Let's build our economies together. He didn't do that. I think if he had opened up to Iran, it would have been amazing, or worked with China. But I don't know. Maybe it seems like every president you vote for, you get John McCain or Lindsey Graham, chicken hawks. You get chicken hawks. Well, John McCain wasn't a chicken hawk, but the rest of them. But here we are in the United States, proving to the world, literally proving to the world, we can no longer defend Saudi Arabia. We can no longer defend Kuwait. We can no longer defend the UAE. And I know the argument is that the United States is self-sufficient in oil. We're not. It's just not true. It's just not true. We produce a lot of oil equivalents. That includes a lot of natural gas, but you can't run a trucking fleet and automobiles, at least not yet, on natural gas. There's some. I'm not an expert on cracking oil, but a lot of the oil that we produce in these tight plays, it's good for driving your automobile, but it's not good for the industrial uses like diesel. It's not good for other purposes either. So I just, that, which kind of explains maybe why we went down to Venezuela. Our refineries run on Venezuelan crude, not on this other, I guess it's lighter oil. Well, when the royal families are no longer protected by the U.S. military and the U.S. power, there's no longer any incentive to tie. There's a little bit because their wealth might be here, but there's no incentive to tie the price of oil to the dollar. How, and I've been saying this, more and more people are talking about it, but I've been broaching this subject for a long time with you. How difficult is it for MBS to call up Putin and say, you seem to have the weapons for the new wars. Why don't we make a deal? And then call up, I have a hard time thinking he would want Chinese troops around, but maybe calling up Iran or Egypt. I'm not sure they'd do that either. But maybe, well, even India. So then you do come back to maybe it's the United States. But I think after this blunder, the United States is going to be out of the Gulf. Oil's no longer going to be priced in dollars alone. And I think it's possible that maybe not quickly, because there's no single market in the world that has the depth of our bond market in particular, but also the depth of some of our other markets, real estate, stocks. There's nothing in the world, but it'll come. It'll come. And the economies of this world are moving away from Europe. I think we're rushing it away from here too. Anyway, I think I'm sure the bond market can get to the point more quickly than but I think the bond market is processing, digesting the facts that the Middle East is in play. Oil from the Middle East is in play. And control of the Middle East is in play. I think the bond markets are adjusting to that. And it's showing up in interest rates. And the bond market is a real threat. If the bond market breaks, the stock market's in massive trouble. And I saw a number which is a little hard to believe. But we have $40 trillion in debt. I have no idea what the average interest is. But if you take $40 trillion and you multiply it by 5%, my calculator won't get it, but I'm a little scared to say it out loud. Is that 2 trillion in annual interest costs? It's tough. So I think that's why Trump was buying the yen. I also think the carry trade is in trouble, obviously, as interest rates go up in Japan. I'm not sure interest rates are going to go up, though. I don't know. That's the thing. The bond market is saying it's hard to predict. But if private credit is in trouble, if private equity is in trouble, if Oracle goes down, if OpenAI can't IPO, the destruction of that quantity of equity and debt is not inflationary. It's deflationary. So I have a hard time. I don't know. I have a hard time joining the choir that interest rates are going to skyrocket from here. Eventually, when we print a lot, look, I've told you, I believe the market still has a lot, this rocket ship last stage, nearly vertical move. Everybody will be getting in. That's when we probably should be buying puts and being careful. But I think from that high, I know it's extreme, but I think it could be 90 to 95% correction in the middle of it. It's probably best stated at 95% correction if you price it versus gold or something. But anyway, I think it's going to be massive. The panics will be huge. Maybe AI delays it. Maybe Trump's plan for victory in the Middle East by strengthening Israel as, I guess, our only ally in the world. Maybe that'll work. But when the market crashes, if it does, have to admit, it's a projection. But if it were to crash that much, or even if it's only down 80% or 70%, I think the Fed and the U.S. government will be where the whole world turns to provide liquidity, and we'll do it. And it might be trusted for the one last time. But I think U.S. debt could go to 100 trillion. Why stop there? I think we looked it up the other day. I think the Fed's balance sheet, if I remember, is 4.6 trillion, maybe 5 trillion. I think that could go to 50 trillion. It's going to be dramatic. Now, all that money is going to give an opportunity for people, particularly if you are one of the first to see it, of reshoring. The world is not, we are not going to be the unipolar country in the world. We're going to basically have Canada, Greenland, Alaska is our strength in the Arctic. We'll have Mexico if they don't reconquista us. and we'll have Central and South America as our sphere of influence. We'll give up on Europe. The UK will go probably work with China. Germany, I don't know why they don't do it yet. They just have to change the size of their railroad tracks and they can be producing goods for Asia. But I don't know. They seem to not want to do that. But the world's going to break at least first into China, maybe Russia, although that seems like the same area, doesn't it? And the United States. There's got to be room for India. There's got to be room for Southeast Asia, maybe room for Brazil, maybe room for one of the countries or two of the countries in Africa, where the young population is. But our future, our next 5, 10, 15, 20, 30 years is not going to be the same as the last 40 years. And our preeminence is going to have to be earned, I think. In that environment, as we print all of those dollars, and it's not, I don't think it's really printing, it's bailing everybody out. I could see interest rates go up after that. And I could see the price of gold go to $100,000 an ounce. That would call in question my prediction that I think silver will go to par with gold. But all those missiles that, those precision missiles that Trump is launching at Iran so effectively on behalf of Israel, every one of them has a monster box of silver in it. So silver's important. Anyway, I don't know. I didn't sleep much last night, and I've been on the phone all day, and sorry for my once or twice weekly geopolitical views. All right, so let's move on. It is I think what I'm going to talk about first, if anybody's listening, because it's late, I want to talk a little bit about the gold company that many of you invested in. I tried to print out who all is in it, but I think it's somewhere between 25 and 30 investors, maybe a little bit more, but it's something like that. And I talked to some of the investors today. I haven't made any campaign, but here's where I come down on it. And I barely slept last night. I was doing a lot of research. Here's where it is with that gold company. I lost all credibility with the company because I promised to raise the $5 million to fund the pilot plant and produce gold. Now, I never would have put up, if I had an investor, which I did, I would never give that money directly to the company. Who would? You do a lot of research, due diligence, see if the process works, make sure title's right. You do things with milestones. You tighten up governance and control, all those things. I never performed. I made, for probably at least 9 months, maybe as long as 13 months, in good faith, by the way. I made a lot of not promises, but assurances that it was going to happen. And I signed a contract to that effect. And it never did. And that's life. Such is life. Well, my credibility with essentially the one guy, I think, taking on the role of the company, and I don't think some people are leaders, some people aren't. Some people are good at being the number 2 guy, number 3 guy. I just lost all credibility. So in the meantime, another group, and I'm going to get the time wrong, on the same price level is my understanding of what we did. Another group put up $1 million about a year and a half ago. Now, they didn't put up the $1 million without doing some due diligence. I talked to them. I've been trying to reach them for weeks, but I talked to them yesterday, and I'm not going to say everything we talked about, but in general, they over time, they've put more than that 1 million in. They have something like 6 million or more in the company over the years. So before they put the million in, they met with the, I guess you would call him the founder, but also but also the genius, the metallurgist behind the whole thing. When I talked to him about, about 3 or 4 months ago, he said to me in the middle of I had to sign an NDA, which makes it limiting to what I can say, but he went over his updated presentation with me. And I'll try not to say anything about it because I signed an NDA. But he said to me, William, in this area, I'm not sure. I think he called me William, but probably in the middle of it, he forgot who he was talking to. He said, in this area, he said, that's not how he said it at first. He said, you got to understand me. I am God. I said, you are? I've been looking for you. And he said, no, in this area, I am God. Nobody knows more than I do. And he went through the whole history, and I better stop there because I don't know what the NDA covers. But so you've got the founder and the brains behind it who has continued to, let's say, perfect his processes, some of which has been published and it's out there, but it relies on essentially what he's developed. He owns it. It's always been thus. And it belongs to him. Now, that process is no good without the resource. You can't just transfer, although probably eventually, as around the world, more and more deposits are developed. This is a huge area in Japan, Korea, Russia, China. It's either Brazil or Argentina, South America, let's say, Germany, Poland, Romania. They're all scrambling to come up with how to get nano gold into production. And there are breakthroughs. There are breakthroughs. And typical of younger generations, they don't give any credit to experience and they don't want to pay for anything. You just go on the internet and you can get all the information for free and you're suddenly an expert. So I'm giving you a little bit of my editorial as I've been thinking about this I've sensed this for a few months. And then for the few weeks, I've been trying to nail it down. And I think I finally know where I think everything's headed. So the project became the founder, the metallurgist, the engineer, the genius, the scientist, very wealthy on his own. He's done it before. And then it's the company, which is essentially one guy. And then this other group came in. Well, you know what? They had credibility. They've got resources behind them. They've got attorneys up the wazoo. And when they put up the first money, they did get, I think it was a professor, but they got experts out of Nevada to test the resource and to opine on whether or not this story was really real. And the answer came back affirmatively, and the money went in. But then what they've done, I think, over the last year and a half, whatever the time frame that's elapsed. And remember, my credibility went to worse than zero, to the point I think I've been ridiculed, which fine. You guys, many of you guys do it anyway. So they've had outsized impact on the company. I would go so far as to say they control the company. A little bit of that is just how they're treated. But during the last year and a half, I think they've done a number of testing processes. They've had a nano PhD expert out of, I think, New Jersey, go through it, go over it, study it for months. They apparently have also gone through and used third-party, completely new. Nobody the rest of the company, I think, has ever heard of. Maybe the guy that's there, maybe, but not the investors, and certainly not the scientist, the genius. And they tested it again, and you remember it's probably still here, but do you remember the tests I showed you all along? If I have it here, I'll try to show it to you again, but it's probably over there because I moved all my files around. Yeah, I think it's over there. But do you remember that there already had been third-party testing of the resource, and the material came in at 0.038 ounces per ton. 0.038 ounces per ton. And then in what's been published and what you can find in the SEC and research reports, this gentleman had developed these procedures and then had to keep diddling with it, I guess. But gets somewhere between 0.2 and I think 0.24 or 0.25 ounces per ton. A significant difference of gold. I'm putting my own interpretation here. I think that this group has decided to go ahead with the it's not standard, but it's the acceptable process that engineering firms use to assay this kind of resource. So my opinion, I don't know. No one told me. But my opinion, they got 0.04 ounces of 0.04 ounces of gold per ton. Not the 0.2, not the 0.25 or whatever. But I think they're going to go forward with that. I don't know it, but that's what I think. Now, I also think that they are keenly focused on the other resources there. There's a lot of companies, or at least a lot of acquisition of leases all around us for metals like lithium and other palladium, I think platinum, silver, other rare earths, and water. The water is valuable. So I think their view is, let's move forward and produce cash flow. Let's just get going. I kind of agree with that. Now they're doing a lot of due diligence. They're doing all the work I would have done. They're likely to do it in stages. Fund it at milestones. Everything I would have done. So I can't blame them for doing it. There is one difference, though. There is one difference. And I guess I can't really go into that detail. I can't. But in general, my approach would have been to make sure that everybody's interests were looked out for and everybody's on the same page. I think as pretty successful, wealthy, hard-nosed attorneys and private equity people, they see it differently. And they're not wrong. They're not wrong. You got to go ahead. You got to shed all that legacy, and you got to go ahead with a clean game plan. So I have a choice, and I haven't made that choice yet. But I can do nothing, absolutely nothing. And I'm sure people would say, well, he was a big bullshitter. He promised to raise $5 million. He never got it in. And he always was just a big waste of time anyway. But if I do nothing, I think there's two outcomes if I do nothing. I think one is, and it might happen anyway, but one is some kind of bankruptcy fight or some sort of nightmare, lawyers against lawyers that drags on. Or this group just does whatever they've already got planned to do, and everybody's happy with whatever the residual or the crumbs that are left. It'll all be gentlemanly, it'll all be nice. I don't like that outcome. I don't like that outcome at all. The second thing I could do is go to investors and maybe people that I've already relied on, and tell shareholders, almost like a bankruptcy, here's an alternative plan. You know, when you're in bankruptcy court, they talk about plans. I don't think that's the appropriate language here, but I don't know what else to call it. And say, hey, look, I've got 5 million, I've got 10 million. I'll, fly to Vancouver, meet the guy, we'll get everybody together, and we have an alternative. We're gonna use this 0.20 or 0.25 result, and we're ready to go. And so that would involve, one, rapidly catching up, finding an attorney, and I have one, and raising the funds for that, finding some sort of standing that makes sense, and building an alternative. I'm drawn to that because I wanted to build this project out and make something happen for everybody, and treat it. In money, is there such a thing as treating people fairly? But that's what I would have liked to have done. So that's the second choice. The third choice, which is not a bad choice, by the way, it's not a bad choice at all, is to just accept reality. I failed, and that's true. I failed. I did not do what I said I would do. I did not perform. And I never got a chance to show that that I wasn't just going to blindly hand over money and put, piss money away as it had been before. I just failed. So you got to accept reality. I preach it here all the time. And when you're dealing with money, you're dealing with markets. You have to, as well as you can, look each morning with sharp, cold, clear-headed eyes. So if I get over my disappointment, my ego, I could do it better, all that crap, and just recognize that I really have no standing. My credibility is shot. So you accept that. Then what can I do? And luckily, I've been working for many months with other investors, and frankly, they were ready to put up the exact same 5 million required months ago. I mean, it would, again, it'd be in stages. You'd have to do the various issues. But as I suspected, and it was more instinct than anything else, I think this other path has its own momentum. I really think if I went before the shareholders, they wouldn't take me seriously. If I said, hey, I've got 5 million, I've got backing for 10 million, and here's my plan, I don't think there's a single one of those shareholders that take me seriously. I lost face big time. So I think the best approach is to join the group that is driving the path forward. These are highly intelligent, sophisticated financiers. I'm not sure their knowledge per se of metallurgy, but they've gone out and hired what they think is the best, and they're going to bring it to cash flow. And once it's in production, I believe they will improve the process, and who knows, maybe some of these other big numbers that have already been published, maybe those procedures can be brought to bear. But I tend to agree with the approach, which is let's get it cash flowing. I think, I don't know, there's a couple of things. The company does need money this year by September 1. It's not a lot. It's like 50 grand. But I'm not comfortable. I think I'm 95, 100% sure that I can raise that 50 grand. But I'm not comfortable giving the money to the company because there's just too many attorneys involved on the other side. I can bring one really sharp, smart attorney to bear, but I need money. But I just think it's too risky to ask an investor to wire money to the company when it's not clear what's going to happen. I did research it quite a bit last night, as I've done in the past. And I think there is a way to wire the money, which I'm not going to say over the air, but via maybe a different method and without going directly into the company. But that's something I'm going to work on over the next few days and maybe the next week. But I have talked now to this competing group, and I'm excited by what I heard. Very excited. For example, I said, look, my goal is to prove that the process works, get project financing, and then produce gold for the next 20, 30, 40 years. And you know what? I was so surprised. The gentleman I was talking to, he said, our interests are aligned. I said, I don't want to flip it. And he said, they didn't either. So that was good. I did bring up that, well, you're not going to, if you're using some sort of standard metallurgical process, I doubt you're getting more than 0.04 ounces per ton. So I would like that you leave it open, that we can bring in the other. And he said, yeah, we can, and we can give, depending on what it is, we can give a piece of the company to people that bring. So I liked hearing that. he emphasized more than once that they have gotten gold out of the material, as if this was some revelation. But the fact is, um, if you decided you didn't trust what you were hearing after all these years and you wanted to go out and get a completely third party uh, result, they got it. They got it. And they have the gold. They have the gold. So that's great. I think that's great news. That's a unexpected, completely outside of anybody associated with the company, proof that at least when they ran it, they got gold. Now, what they didn't do is do it, and he admits that, because they were trying to save money and they were trying to, but they, amongst friends, they didn't feel like they needed it, so to speak, amongst friends. I mean, they're doing it informally. They didn't do it chain of custody. So the next step is to raise money to use whatever that, I don't even know who it is or what it was, or the name of it, but they'll raise the money to build a chain of custody report. Just like the reports I've shown you say that they have chain of custody, this will be different. This will be an actual report that from the moment, and they had done it before, but that's so long ago. That's now 20 years ago or 18 years ago. This will be fresh. So I think that's great. I actually think that's great. And here's what I think's going to happen. That process will probably take, well, number one, I don't know what they're going to do, but I have a feeling that they will have very glossy presentation to shareholders. And to the extent that there's objection, I don't think objections are going to matter. I think it's all going to be pretty much, here's the thing. I think the first round of funding will be for this chain of custody third party, completely unrelated to anybody with a legacy to the company, report. And I think that, I don't know, I'm just guessing really, but I think that would probably take September, maybe into the beginning of October if it's funded. But once they have that, the arithmetic's not difficult. Once Wall Street or other gold companies see that analysis, and in the extreme, and I didn't ask him, but I assume they will drill as deep or deeper than was done before. But in the extreme, there may be 2 billion tons or more, believe it or not, 2 billion or more tons of this sand. So if you let's take 2 billion and you multiply it by 0.04 ounces of gold per ton, there's a lot of ifs there, isn't there? That's 80 million ounces of gold recoverable. I don't know the cost of this process. I just assume it's the typical, maybe a caustic fire assay, or I don't even know the terminology. I just am completely uh, uh, believing that it's I don't know what word, a brutalist method. It's not the sophisticated process that's been created in a genius, in God's mind. But if now we finally get a third party report, even with that recovery, it's huge. It's huge. Just to take 80 million ounces times, I don't even know what gold's trading for. Let's say it's 4,500 an ounce. I don't know if that's right. That gives you a top line number of 360 billion. Now, apparently, this process also examined these for these other metals, and then the water. Um, I'm just not conversant in those ratios or anything, but I do know there's palladium, silver, but I don't know the ratios. It's entirely plausible. Well, number one, maybe they're going to get a higher number than what I'm assuming. Number two, as they increase that number, but it's entirely plausible that this 360 billion recoverable could be, it's just, it makes me sound insane, but it could be 3 or 4 or 5 times that. It's a huge upside. So once this report comes, and if an analyst or a gold person can say, okay, that whoever it is did the chain of custody, and let's just say it's 0.04, and okay, they have 2 billion, 3 billion tons of this material. They used to have so much more, but they have the sweet spot. Well, take 2.5 billion and multiply it by 0.0. I'm intentionally going with a high resource number. 2.5 billion times 0.04. It's 100 million ounces of gold. Well, at where do you think gold's going to go? I saw David Hunter's now joined Dr. Lieb's projection from years ago, and others. He's saying 20,000. Rickards for a long time has said 10,000. I don't know. Let's take 100 million ounces of gold times 10,000. Anyway, that's a 1 with 12 zeros. What's a 1 with 12 zeros? It's a trillion. So that's what's ahead, is a third-party report is just simple arithmetic. And if an analyst says, you know what, that just sounds loco, why don't I just take it down to 200 feet and I'm only going to deal with maybe 300 million tons on the overall, not a billion, not 2 billion, not 3 billion. Well, then it's a lower target, but it's a lot higher than what's being priced in now. So that's really good. That's the good aspect of it. In fact, it's a great aspect. It's fantastic. um, I because I guess I'm a perfectionist, or I'm a dreamer, or whatever. I just gave you the numbers at point zero 0.04. What if the proven, well, not proven to anybody else in the world, but the process that God came up for at 0.20, that's 5 times that number. 5 times that number. And that bugs me because, wow, that's even bigger. But you know what? Why not? To move it forward, why not? So, anyway, here's what I think's going to happen. And I don't know it. I told you years ago, 2 years ago, a year and a half ago, there was a proposal that came to the company, and I really thought the company was going to accept it, whereby the shares, the shareholders of the company itself would get, I forget the number, I think it was, I have it somewhere, I think it was 5%, essentially an override, capped at 20 cents a share. But everything would go to this guy, and nothing would come to the company up front. He would pay for everything. He would get all the upside, and he'd work with God, and they would have that. And if it didn't work, well, you didn't get anything. If it did work, we would get out of cash flow as shareholders. We would have gotten, had it been approved, essentially 20 cents a share. I know at that time that the guy was willing to increase, out of the goodness of his heart, our percentage, our participation up to 40 cents a share. Luckily, shareholders voted against it. And then, of course, I came in with my solution, which just left me with egg on my face, which I don't blame, that's just life. So I think we're going to see something similar to that without the cap. I don't know that. It might be a bigger percentage. But I think whenever private equity gets involved, whenever people take over shells, for example, I've told you, I used it with GTII. I've used it in examples with other companies that we've talked about. I think typically shareholders are left with 5%. It's pretty typical. But sometimes it can go as high as 10% or 15%. But I wouldn't be optimistic. I think it'll be low if that happens. But here's the thing: before you panic. Now, I don't know if they can pay for it up front, but I think the theory is anyone who has the note, which is what you have, it's what I have, it's what our LLC has. Anybody who has the note, I think the intention is to give the option of getting your money back. I don't know about interest. I don't know. Or converting it into ownership beyond that, whatever that stub is. And I don't know when the deadline will be for that. I think it's fairly reasonable. But when you think about it, this group put money up $1 million on the same terms we did. So they're kind of looking out for themselves too. So our interests are aligned. Our interests are aligned. So I think for all of you, I don't know how quickly, I personally, if I were out raising money, the last thing I would ask an investor to do is pay back somebody else's note. But it could happen right up front. I think it's more likely out of production, or once the arithmetic is done, once that reserve report is there, I think money's going to come flooding in to finance the company. Unfortunately, I don't have any part other. I'm going to try as much as possible to get my new investors and you to be able to co-invest, and that's good enough. That's good enough. But it's they're going to run the show, and that's just how it is. But I think it's exciting for everybody, and I think once of course, we can't be sure that the third-party report is going to work, but there's good indications since they did recover gold. Of course, I didn't see it. I've just been told it. So once they get the arithmetic, I think money will flood in from the investor groups, from everywhere. And why? What's the difference between now and before? Well, I think maybe it's the credibility of this group instead of me, number one. Number two, I think it's the price of gold and the awareness of the price of gold. And number three, which is good for us, there will be a clear path to production and fairly quickly. So I'm excited. You can tell I'm disappointed because it isn't me. But life isn't always about me. It's about moving it forward, making your accommodations, making your compromises, and having a successful result. So I think the worst case of what your options are going to be, or will be, with my with the LLC that we set up, you'll get your money back if that's what you want. I don't know if it'll be, cash on the barrelhead, but it might be after the report, if that's successful, that the company raises all the money they need, which is what I think will happen. Gold is a funny thing to affect on investors, but it'll be at a much higher price, which is something I would have done, but I didn't get the chance. So, but I have given this project a lot of thought over the year. So they're going to do it that way. So it might be relatively quickly if that's what you want. But I also think you're going to get an option, if you want to go along in a clean way where the money is going to the project for sure. And I think that's very exciting. And I think the upside, even at 0.04, as I just showed you, I tried to show you the maximum, but my gosh, $1 trillion? That has a nice ring to it. But obviously, you cut it back. Just assume they got $1 an ounce. It's 100 million. If they got $1,000 an ounce, you can do the arithmetic on 100 million ounces. I think it's going to be a good story. So it took me a while to absorb the information. I think there's a lot I haven't said, but I think what I've presented is um, should give you enough comfort that your investment. I mean, there's no guarantees. I mean, this third party now, when it comes to testing, they might come out. Anything can happen, but it looks good that it's going to have a favorable um, result. Why do I say that? Because this group is moving forward, and they did the work. So why would they be moving forward if they don't believe it? But I'm not saying it's 100%. It's the same kind of risk level we always took. But I think it'll end up being up to you. If you just want your money back, you'll get it back, I think. I just don't know exactly when. But I don't think you'll have to wait a year. If I had to guess, with this report, they'll raise enough money to finance the pilot plant. That will be at a higher price. That price will be stepped up based on the report. If the report is legit, which I assume it will be, the pilot plant should be successful. Once they are producing gold, well, then I can bring them project financing, but they can do it. I mean, it's not going to be hard. But that means no more equity issued, no more chance to invest. It's project financing, and they build the plant and they produce for the next 10, 20, 30 years. And, they got a young guy, that, I guess he might have a great but I think for those of you who decide to remain, I think the upside is going to be massive over time. So anyway, that's my summary on that. I wouldn't worry about it. I would focus on that things are going to move now. They're going to move. I think in August it's going to be slow. And I think I've already raised all the money they need. So I think I'm going to have some say in what opportunities are given to my investors. But I believe I've raised all the money they need. So that'll be good. That'll be good. And they are gentlemen. And I think we're going to have a great working relationship. So the rest I can't control. I can't control how other parties are going to react. But I'm excited. I'm disappointed in one way because I've got to let go of what I wanted to happen. But I'm excited for you. All of my investment probably in the shares, I wouldn't say it's forfeit, but it's going to be, it's not going to get the gigantic upside that I wanted. But the notes give us some real optionality, it looks like. And that's what you own. You own the notes and their conversion. I think they're going to get a better treatment. So anyway, that's what I know now. So let me move on. I'm excited, bottom line. I'm a little tired, and I'm trying to be careful what I said, so I'm a little bit stilted in my presentation. But I think it's a tremendous positive that it's going to move forward. Of course, even that I can't. That's not a promise because gold and men. It's a weird dynamic. All right, I want to move on to finger motion. So let me get the news up on finger motion today. As you know, um, as you know, finger motion closed today at 29 cents, 0.2909, and it's up in the aftermarket, well, actually at 812 at 0.3020 per share. According to Yahoo, the volume today on finger motion was 6.7 million shares, 6,762,790. The market cap is 17,835,000. And the news today was this. I'm sure you've seen it, but I'll read it out for people that didn't. Finger motion announces leadership change. Leadership change. Subheadline: seasoned. I always like that. I always imagine that it's Old Bay seasoning, or some sort of barbecue seasoning, or maybe a nice Italian herb mixture with some olive oil and lemon. Nice seasoning. Seasoned NASDAQ senior executive and corporate attorney brings proven public company leadership to finger motion. Sounds exciting. It's out of Singapore, which is interesting because I thought Finger Motion is a U.S. company. But anyway, now there's positives here. Maybe they're changing the venue and they're going to start implementing big contracts. But don't invest on hope. Don't invest on hope. So here it goes. Finger Motion, a mobile services data and technology company, announced the appointment effective yesterday of Jolie Khan, Kahn, as Chief Executive Officer for the company, replacing Martin Shen. Martin Shen, outgoing Chief Executive Officer, commented, quote, "As I step down as Chief Executive Officer of Finger Motion, I want to express my sincere gratitude to the Finger Motion community, my colleagues, our shareholders, employees, customers, and partners for their trust, dedication, and unwavering support throughout this remarkable journey. Together, we guided the company from its early days on the OTC markets to achieving a NASDAQ listing, a milestone that reflected the hard work, resilience, and commitment of our entire team. Along the way, we strengthened our business, expanded our opportunities, and built a solid foundation for long-term growth. As I pass the leadership of the company to the next generation, I do so with great confidence in Finger Motion's future, and I am excited to see what's next for this company. Thank you for the opportunity to serve you as your CEO. It has been one of the greatest honors of my professional career and a privilege to have been part of Finger Motion's journey. I certainly, for one, wish Martin Shen the best. I think he was a gentleman. I think he worked hard, and I think he gave Finger Motion his all. I believe in the body of his comments is this perception that if you take a junior market company from the over the counter and get to the NASDAQ, you've achieved something. My opinion, particularly under Adina Friedman, that if you're a sub 100 million approximately market cap company, under $5 for sure, and you have been subject to toxic financing, even if you bought it back, and you need capital, and they know you need capital, they're going to crush you. And she doesn't care. She doesn't care. I think it's the biggest mirage on the planet that somehow getting on NASDAQ is an accomplishment. In my opinion, if the OTC markets can be sort of like a slaughterhouse next door to the stockyard at the low part of town where the rain collects and the mud and the manure and the slippery and the smell and the urine, I think the NASDAQ's just up the hill with gilded walls and maybe air conditioning and sluices that take the urine and manure and the offal and the blood, and they send it down to the over-the-counter market. But I think it's the same procedure. Just take CEOs and shareholders and companies, and at first, if it's sheep, at first shear them over and over and over and over and over again, and then knock them over the head, or worse, do it in a way that the animal is screaming and screeching and in pain down in the over-the-counter market. But up in the NASDAQ, like that movie, No Country for Old Men, they just get it over with without all the visible signs of what they've done. But make no mistake, being on the NASDAQ is not an achievement unless, and that's true of all these companies, unless, I would say three things. Unless something has happened, like in a resource play or in a oil and gas, that's a resource play, that the net asset value of your company has changed overnight. That'll change things. Or if you have a big contract that is defined, it's real, the numbers are posted, it's verifiable, or many of these, so that your revenue can be calculated on a specific denominator, not a denominator that is all loosey-goosey by some formulaic, backward-looking number and all that. If you have a defined denominator and you can calculate revenue or profits, more importantly, cash flow per share, that's a big step. And then, of course, in the biotech area or any government type market, if you get one of those contracts or you get an assignment, that can change your company overnight. And of course, in technology, the same thing. If you can suddenly get a transformative breakthrough, or you get out of your R&D, or you've created a new product with technology that leads to predictable, or at least the potential of predictable revenue, and you start having cash flow, and your denominator is defined, you can get out of this. Why? Because institutions will buy you. Once institutions start buying, what the Grim Reapers do stops. Those algorithmic machines, they vanish. But it's hard to get institutions to buy you when you're not in Louisiana, down on the bayou. It's hard to get institutions to buy you when they cannot define how many shares you're going to have because of these toxic financings. And Adena does nothing about that. Now, the securities laws, as we've learned recently, the securities laws are all designed for disclosure, not for fairness of the deal. But what should Adena be doing on the NASDAQ? Shouldn't she be looking out for her CEOs and her companies and her investors? But I think the story is that retail volume is only about 15, maybe 20% of the markets anymore. So I think that's where the tail is. I think her investors are the funds and the machines that create the volume for her exchange by essentially selling shares that don't exist. And it's all okay by the powers that be, as long as you disclose it. Of course, the powers that be don't even acknowledge that groups like Anson funds do what they do. I don't know. The whole thing is just the nightmare we're in. So let's go on with the story. Ms. Khan brings extensive experience in corporate finance, management, I'm sure, and corporate and securities law. Most recently, she served as Chief Executive Officer of AVAX One Technology Limited, a digital asset treasury company that requires a lot of management, where she led the company's rebrand and strategic pivot to an avalanche digital asset treasury. Well, I mean, one thing that stands out is if she can bring that experience to Finger, maybe something can happen. Maybe they can create a treasury. I don't know. I mean, you'll have to assess that. She previously served as counsel for one of the largest publicly traded Bitcoin mining companies in North America, as well as interim CFO to several NASDAQ-listed companies. So she's an attorney who thinks like a business person. That's a rare combination. Throughout her career, Ms. Khan has held various corporate finance positions, so she must have a background in finance, including significant involvement in the preparation of periodic filings and financial statements, public company audits, and the structuring and negotiation of complex multi-million-dollar debt and equity financings, mergers, acquisitions, and reverse mergers. So she's good at reverse mergers. She spends her time preparing the filings and the statements, yet at the same time, she gets involved in the complex negotiation of these larger deals. That's a talented person that can spend time on the details of bookkeeping and auditing, in addition to legal work, and then be the person negotiating. That's actually a very talented person. She also represents public and private companies, hedge funds, and other institutional investors in their investments in public companies. Ms. Khan holds a Bachelor of Arts from Cornell University, high above Cayuga's waters, there's an awful smell. Some say it's Cayuga's waters. I say it's Cornell. That's a good university. It's just something I picked up years ago. And she has a JD, magna cum laude, from the Benjamin N. Cardozo School of Law. So I tell you, she's got a Bachelor of Arts in something, and she's a lawyer, but she's schooled in finance and bookkeeping, and she represents a lot of companies and hedge funds and investors, and she negotiates complex multi-million-dollar mergers, acquisitions, and reverse mergers. I tell you, you've got a talented individual. Quote, finger motion is at a pivotal juncture, you can say that again, in its evolution. And I'm honored to step into this role, unquote, said Ms. Khan. Quote, I look forward to working closely with the board and the entire finger motion team to build on the foundation Martin Shen has established, sharpen our strategic focus, and drive long-term value for shareholders, unquote. Sounds good. So about finger motion now. Finger motion is an evolving technology company. As the user base of its primary business continues to grow, the company is developing additional value-added technologies to market to its users, sorry. The vision of the company is to rapidly grow the user base through organic means and have this growth develop into an ecosystem of users with high engagement rates utilizing its innovative applications. Developing a highly engaged ecosystem of users would strategically position the company to onboard larger customer bases. Finger motion evaluates other emerging technologies as it determines its business objectives for the future. That, in my judgment, could have been written by Kamala Harris. But anyway, that's the description for the company. Now, let's go into what could be good and could be bad about this. And I'm going to just give it to you. I didn't try to put any spin on it. I will tell you my opinion before we start is I think she's there to make sure that the Toad and Alto benefit from the harm they've done. But that's my view, and that's my opinion. And maybe there's a rational, possible other way to view this. For example, their Blue Flare agreement, their MOU. Maybe she has the capacity to come in and make that happen. So let's find out. Um, so this is the article I just read to you. Finger motion announces leadership change. My question is, can you find the other discussions? And because he's the Frenchman, he can, on Finger and the financing. And I guess there is a little bit of an attitude in my question. I said, isn't this of a piece? I asked, who is she? Is she related? I guess I was tired. I said, is she related to one of the purloiners? And then I apologized. Sorry, that's how I see it. So here comes the answer. And the answer says, yes, this is of a piece. But as being the Frenchman, he always corrects me, which is, I show you when the Anthropic AI talks back to me. But the link isn't the one you're reaching for. Oh, it's better than that because it's in the note itself. Oh, all right. Let's keep going. The clause that makes this Alto's appointment, not the board's appointment. I pulled the note again and exhibit section 8A 15, events of default, quote, if Martin J. Shen, the company's current chief executive officer, ceases to be the chief executive officer and no reasonable replacement acceptable to the holder is appointed within 90 days following such cessation, that's an event of default. See it up here? And that ends the quote at cessation. Okay, so Shen stepped down effective August 4th. So this clause is now live. The successor has to be acceptable to Alto or finger motion is in default. I would argue that Alto put her there, but that's up to you. So when default happens, it equals 125% acceleration of the note, 12% default interest, and alternative conversion price drops from 90% of the lowest 7-day volume weighted average price to 80% of the lowest 7 days VWAP. So to be in default is a pretty major penalty to the company. So the conclusion here is, so either Alto blessed Jolie Khan before the announcement, or Finger just started a 90-day countdown on a first lien default, with Finger having $987,391 in the bank. There is no third option. The board did not get to pick a CEO here in any meaningful sense. So one question that occurs to me is, can she be the person that brings in significant financing and gets finger motion out of this? Well, she may have that kind of track record. My other opinion is, I mean, I ask you, do you think Peter Boards was put in charge of created to actually make that work? Or was he helping Aubrey Advisors and Chadron exit their, in my opinion, they took $100 to $150 million out of the market. Can't prove it. But that's why you hide things, because it's hard to prove. But anyway, or was he there just, he failed, this successful, wealthy guy? Did he fail or did he actually succeed? Anyway, next one. She is a securities lawyer. And I don't know, I've worked with a lot of securities lawyers. I've never found that any of them had the skills to be a CEO. But she, I think, is clearly well talented. She's a sole practitioner for almost 25 years, since 2002, which is pretty amazing considering the rest of her CV in that announcement. She has a Cornell Bachelor of Arts and a Cardozo JD. Her career is a straight line of busted microcap officer seats. Her career is a straight line of busted microcap officer seats. Her career is a straight line of busted microcap officer seats. Acting CFO of Tough Built in 2019, General Counsel of Marathon Digital 2019 to 2023. That's the large Bitcoin miner in the release. CFO of Ocean Biomedical 2024, and then CEO of AgriForce. AgriForce is the tell. Down 95%, trading near lows. And in September 2025, she rebranded AgriForce to AVAX One. Now, this is interesting to me. Announced, AVAX sounds like what I think it sounds like, and maybe into what was going on back then. I don't know. But she announced a $550 million raise. I don't know if it ever actually got funded. It's 300 million pipe plus 250 million equity linked to it. And this raise, the purpose was to accumulate 700 million of Avalanche tokens. So I don't know. The raise was to acquire tokens. But I guess it was by issuing shares. To me, that doesn't make sense. Why, if the tokens are valuable, why wouldn't the people putting the money up in the company just go buy the tokens themselves? Something doesn't smell right to me there, but you know what? She did it, or she announced it, announced a $550 million raise to accumulate 700 million of Avalanche tokens, Scaramucci backed. Stock ran 220% intraday on the announcement. So when was that? She resigned July 3rd, 2026. So in September 25, she rebranded it and announced a raise. It's not clear here if it actually happened, but the stock ran 220% intraday on the announcement. She resigned July 3rd, 2026 by mutual agreement with a $160,000 cash payout and $250,000 in unregistered shares. 32 days later, she's running finger motion. She's in high demand. You got to give her credit. And note what Finger told the market on June 2nd. Finger intends to derive, quote, increasing portions of future revenue from markets outside Asia, unquote, and expand into, quote, emerging technology markets globally, unquote. Then Q1 fiscal year 2027 came in with telecom revenue down 94%, total gross profit for the quarter of $208,478 and under $1 million in cash. The operating business of Finger is functionally gone. What's left is a NASDAQ listing, a shell, and a secured lender. Her own bio in Finger's release, she represents, quote, public and private companies, hedge funds, and other institutional investors in their investments in public companies, unquote. That's the lender side. See, stated in Finger Motion's own words. So where the money actually goes, two provisions you'll want in front of you, and I guess this AI is projecting a pivot. So section 6C, subsequent placement redemption right. On any subsequent placement, explicitly including at the market sales, maybe I asked, can she raise that money? Alto can demand redemption at 115% of outstanding value, up to 30% of gross proceeds. A $300 million pipe hands Alto its entire position back in cash at a premium immediately. So this is something that I clearly asked, and this was the answer. So I guess if she can raise 300 million in a pipe, she can get Alto out of here. So that's something to look for. Section 5C, the dilutive issuance ratchet. Any issuance below 94 cents resets the fixed conversion price to the lower of that price or the lowest VWAP in the 5 days after the announcement. A DAT pipe priced, who dat? That sounds like Clay. Who dat? A DAT pipe priced anywhere near current levels permanently reprices Alto's payment down. So run your FAR bank test. Does Finger now have a named, contracted, dated repayment source? Arguably, yes, for the first time. But it's a capital raise that hasn't been announced, and the contract routes 30% of it straight to the lender at a premium, while ratcheting the conversion price down on the way through. That's not a FAR bank. That's the lender building itself a toll booth on the bridge. Well, that's the structure here. But what if the company can raise money above the market price? I don't know. Maybe there's a miracle here. The October 6th vote to lift, that's October this year, October 6th vote to lift the 12,256,260 share exchange cap sits in the middle of all this. And a CEO whose demonstrated skill is executing 9-figure pipes makes that quote unquote for vote recommendation a great deal easier to sell. I don't know how many pipe she executed, I should have asked. I don't know if that pipe got funded. It got announced. I don't know if it got funded. The Scaramucci deal. Scaramucci. Isn't that the man with the golden gun? Okay, so here. On purloiners, this is where I have to hold you back. See, they always do. I can't put con in the art and orbit on the evidence I have. There is no family relation, no employment link, nothing in the filings tying her to Alto, Ayrton, or Kotri. Well, it could be the toad. One thread worth chasing. PitchBook lists con. PitchBook lists Con's firm as legal advisor to Genius Group in 2024. Genius Group being the company that sued Alto, Arton, and Kotri in the Southern District of New York in February of 2023 and settled a month later with a full exculpation. PitchBook is a single thin source. The entity label is ambiguous, and the dates don't line up with the litigation. If it's real, it's an engagement letter, and engagement letters don't hit the SEC reporting. So what it means, the honest frame, so to speak, and it's the stronger one, is you don't need a personal tie. The contractual one is documented, it's in the note, and it's dispositive. Alto holds a consent right over who runs this company. And the new CEO's specialty is exactly the transaction that Section 6C was drafted to harvest. Okay, that's a point of view, I suppose. The appointment 8K is not on EGDR. There has to be an 8K filed with this change in CEO. So this is due within 4 days of the August 4th effective date. So the deadline is Monday, August 10th. So it could be sooner, but we should be looking for an 8K filed with more information, maybe. But going back through what is filed turns up 3 things worth having. Number one, the key man clause was never in the 8K. The May 13 8K narrative lists the events of default in bullets. So here are the events of default: trading suspension, failure to deliver shares, share reserve failure, payment default, cross default above 500,000, bankruptcy, judgments, rep and covenant breaches, registration failures, lien failure, minimum catch breach. Nowhere in the 8K filed does it state what's in the exhibit, that if Martin Shen is replaced, Alto has, I think, 90 days to approve the new CEO, or it's an item of default. So I wonder if that's really good disclosure or not. And maybe they didn't feel like they needed to disclose it because they had pre-planned all this. That's my opinion. But a lot of people find that there's no proof for my opinions. Martin Shen is not in that list. Section 8A15 exists only in Exhibit 10.2, which is the note itself. A retail holder reading the company's own summary of the financing had no way to know that the CEO leaving starts a 90-day default clock with the lender holding approval rights over his successor. That is not a technical omission. It's the single provision that most directly explains today's press release. And it was left out of the plain English description, while the 30% of gross proceeds sweep and the 125% acceleration both made it in. The pivot was already underway before she arrived. June 4 and June 9, 8Ks state a non-binding MOU with Blue Flare Energy Solutions for behind-the-meter natural gas-powered edge AI inference sites across Alberta, British Columbia, and Saskatchewan, 0.5 to 2 megawatts each, using Blue Flare's BALA load following platform with co-located Bitcoin mining as the load balancing secondary use. Blue Flare gets exclusivity in the territory. That exclusivity provision is binding on execution, even though commercial terms are not. It's an MOU, non-binding MOU. Then on June 2nd, the quote, revenue from markets outside Asia, unquote, language. Then August 4th, a CEO whose resume is general counsel of Marathon Digital and CEO of a company doing Avalanche Treasury plus Bitcoin mining plus AI computing infrastructure. That's not a random hire into a telecom shell. The job description was written in June, and she is a precise fit for it, which strengthens the read that Alto signed off on her appointment. A lender with a consent right and a first lien does not lose control of the succession by accident. So I read that there may be, and I guess I'll have to look into that next, but there may be that she's going to line up a pipe and bring in large financing, and maybe she can take her expertise as an attorney and an accountant and a negotiator and a representative of small and public companies and hedge funds, maybe, and CEO and CFO and securities attorney. Maybe she can take all of that and bring this Blue Flare contract in Canada to a successful result for Finger Motion. I mean, things are possible. And this is being directed maybe out of Singapore. And I don't know the connection with Canada other than, you know, Canada has a lot of connections with China and Southeast Asia. And so maybe it can happen. So we got to bear that in mind. Maybe she's going to jumpstart the company. So here's the clock to look out for. From Q1 of fiscal year 2027, the 10Q, and the 424B3, both of those were filed in July 15 and July 16. Revenue at Finger Motion was $650,089 for the quarter. Gross profit was $208,478. So the quarter was I mean, if you multiply that quarter times 4, Finger Motion's revenue has dropped considerably. I don't know if you can do that because, their revenue could be batchy. It could come in lumps, but that doesn't annualize very well. Net loss for the quarter was $2,009,784, and the accumulated deficit was $43,185,481. Operating cash outflow, $2,345,654. Cash at May 31 this year, $987,391. Now it does seem that they spend money, so I'm not sure that's going to be the balance currently. There's also explicit going concern disclosure. A lot of these companies have that. It's interesting that this is highlighted as explicit. Maybe the attorneys felt that needed to be in here in a bolder print. Accounts receivable, which is a big number, 47,175,549 gross, which is actually 44.9 million when you net out a $2,248,468 allowance. So they have accounts receivable of essentially 45 million, which just didn't hit the quarter. So this revenue, I guess the word would be that it's lumpy. But remember, this account receivable is immediately rolled into the top-up business, which is essentially grocery store type margins. So let's go with it though. They have essentially 45 million in accounts receivable gross. Well, that's not gross, that's net. And 45 million net against 650,000 of quarterly revenue and 2.41 million for all of last fiscal year, I assume, in revenue. 24.1 million in revenue for last fiscal year. The market cap today is roughly $12.9 million. The float is 46.2 million shares. So, one way to look at it, they have essentially $1 of accounts receivable per share. So anyway, run the covenant against it. Section 7CI requires available cash never to fall below 500, never, the big word, fall below 500,000, and a breach must be disclosed on an 8K within 4 trading days. Cash was 987,000 on May 31. The registration went effective June 22nd to 23, which released the final 1 million. So there's about 2 million probably now available at the start of July. Operating burn of 2.35 M a quarter is roughly a burn rate of 780,000 a month. But you know what? They have this accounts receivable. If it's any good, they may not fall below 500,000 in cash. So anyway, the logic here though is this puts the 500,000 floor somewhere in late August to September. It's rough, and it assumes the burn rate holds and there's no new money, but it's the same window as the proxy mailing, and it's a hard self-reporting trigger. If, and we got to look for it, if that 8K shows up It means the note is in default, and it means 125% acceleration at Alto's election, 12% default interest, and the conversion price drops to 80% of the lowest 7-day VWAP. So I ask you, and you can compare it to Peter Board's at Collective Audience. That's a lot of possible good stuff. And wow, she's great. He was great. Look what's going to happen. It brings in buying, it brings in volume, which is what the combines need to reap every day. That's how I see it. But there's an alternative. The company is setting up to move away from the top-up business and go in this mining business up in Canada with Blue Flare. That's an alternative. And you know, if at the same time they can take out the Alto financing, you know, your mind starts saying, well, hey, this is good. There's a way out. But remember, Peter, for example, Peter Boards came in with all the talk and the meetings and the addressable market and this and that, the smart people, that woman that did that company, was it Priceline or was it Street.com? She came in. What did it do? It kept the daily volume in dollars up, in my opinion, while Aubrey Advisors made a nice profit out of Canada for themselves. And then Boards sold, essentially raised money from a guy out of Connecticut. I think his name was Greenberg or Greenstein. He ended up with 95% of the company. Now, I'm sure if anyone looks, there's no connection in the case of Collective Audience between, if his name is Greenstein, between Greenstein and Aubrey Advisors. There's no connection. But it's right there. It's in front of everybody's eyes. But, you know, that's probably why I'm not an attorney. All right, here we go. The two documents to watch, and this is what we have to look out for. Monday, August 10th, this coming Monday, item 5.02. You got to see whether there's a disclosure. So let's see whether it discloses a consent. So they have to put to the SEC, they have to announce that Martin Shen resigns within 4 days. That's Monday, August 10th. So you got to find out what they disclose. You got to find out whether it discloses a consent or waiver under Section 8A.15, whether it discloses Ms. Khan's compensation, her board seat, and any 404A related party item. If the filing is silent on Alto's consent, note that the company now twice declined to tell shareholders that its lender holds a veto over the CEO's chair. So we got to watch between now and Monday for that. The next thing to look out for is the DEF 14A. I don't know what DEF means, but it's a mailing around August 26th this year. This is a sharper one to look out for. The board is asking shareholders to authorize issuance above 12,256,260 shares in Alto. And can I just point out that I was told dramatically by several people that this is a fixed. No, you don't know what you're talking about. So I got in a little hot water when I disagreed. And sure enough, here it is. They're gonna issue more shares above 12,256,000. And we went through that weeks ago. If the definitive proxy solicits that vote without disclosing that the same holder has approval rights over management, that is a materiality question you can raise on the record without alleging anything. Well, I doubt it's going to happen. All right, so I asked, is this a prelude to the authorization of a reverse split request and then a vote? Isn't this CEO there to facilitate the exit or exits for Alto? So you can tell that I have a certain point of view by my questions. Yes on the first, qualified yes on the second. So let me take them separately. The reverse split is arithmetically forced. NASDAQ deficiency notice dated June 30, disclosed July 2nd. Compliance deadline, December 28, 2026. In order to cure, Finger needs a closing bid of $1 or better for 10 consecutive business days. If you work backward, compliance has to be achieved by roughly December 11 through 14 to fit 10 sessions in before the deadline. A split takes 2 to 3 weeks from announcement to effectiveness once you account for the notification period and FINRA processing. So the split has to be effective by early December at the latest. The stock is around 21 cents. Well, that was this morning. It's obviously it's 30 cents now. So that's a 12.94 million market cap on 61.31 million shares. Getting to $1 needs a 1-for-5 bare minimum split, which leaves no cushion. To land at a defensible $3 to $5, you're looking at a 1-for-15 split to a 1-for-25 split. And another way of saying this, if they don't do a split, to get back to $1, you've basically got to get away. You've got to get to 60, 70 million market cap without doing anything. And maybe she's going to bring in a contract. So anyway, now the part that makes the timing non-negotiable. The special meeting is already called for October 6th with a record date of August 17th. Running a second special meeting in November to authorize a split, you need a new proxy, a new record date, new solicitation on a company with 987,000 in the bank. To run it is expensive, and it cuts it fine against the December deadline. The rational move is to put both proposals on the October 6th ballot. And the preliminary proxy filed July 27 contains only the share issuance proposal, no split. So here's a prediction, and it's falsifiable. And it lands in 3 weeks. If the DEF 14A that mails around August 26, adds a reverse split proposal to the October 6th agenda, the sequencing thesis is confirmed on the record. Cap removal and share consolidation approval in the same meeting by the same shareholders 3 weeks after the new CEO arrives. Well, it seems like it's a little longer than that. If it doesn't appear, oh, I see, 3 weeks. If it's on this mailing, I got it. 3 weeks after the new CEO arrives. If it doesn't appear, they've got a second meeting coming or a plan I'm not seeing. Well, that's possible. There could be a plan nobody knows. NASDAQ 5810C3A4 states a company that has effected a reverse split within the prior 1 year period is ineligible for any compliance period on a subsequent bid price deficiency, not a shortened one, none, immediate delisting. The note matures May 13, 2027. A split effective in December 26 puts that no cure window across the note's entire remaining life. Finger gets one shot and it has to hold. There are 2 ways out for Alto, and only one of them works. One way out is the grind. They can convert monthly at 90% of the lowest 7-day VWAP, volume weighted average price, sell into the tape. The spread is 11% regardless of the price level. So nominal price is close to irrelevant to Alto's economics. But the floor price is not irrelevant. It sits at 20% of the NASDAQ minimum price on the day before signing, or 0.162, 16 cents, 16.2 cents. Not 81 cents. So I was also really told emphatically that it was a fixed conversion price, and whatever it said in the press release, I don't know if it said 81 cents. It might have said 96 cents. I can't remember. The note's own drafting is sloppy on this. 20% of the minimum price, which is initially 81 cents. The 81 cents is the minimum price. The floor is a fifth of it. Drop below that floor, which is 0.162, and the conversion rate doesn't get cheaper, it stops. Section 2D3 flips to a cash demand at a 7.5% premium from a company holding under $1 million. That's not an exit, that's a default. And a reverse split doesn't create headroom because Section 5B adjusts the floor price proportionally for combinations. 1 for 20 takes the stock to $4.20 and the floor to $3.24. So let's read that again. A reverse split doesn't create headroom because the section adjusts the floor price proportionally. So if you do a 1 for 20 split, it takes the stock to 420 and it takes the floor to 324. Same ratio, same trap. What the split does by is the listing itself. No trading market default. So if you fall but out of the NASDAQ, that's a default. No trading market default under Section 8A11. Shares still freely tradable on an exchange. Swell. That's really swell. I bet they're tradable for free. No commission. What a deal. What a deal. What a deal. What a deal. Ollie, Ollie, income free home. Ollie, Ollie, income free home. Man, it's just so depressing how this has essentially been codified. This stealing has been codified. And it's just, and you're the victim. And no one cares. No one cares. What the split does by is the listing itself, no trading market default, which exposes the tension at the center of this. Alto needs a compliant NASDAQ listing. That's compliant in complying to the rules, not compliant elsewise. Alto needs a compliant NASDAQ listing to exit, and Alto exiting by conversion is what would destroy the compliant listing. So the problem here, this is all based on that the only mechanism going on is this note. I think the note is just a pressure valve, an escape valve for what the Toad and other companies like that are actually doing. But, you know, you can't convince a Frenchman. With one reverse split and no cure period behind it, grinding 16.5 million plus registered shares into a $13 million float is self-defeating. They delist themselves out of their own exit. Yeah, except if they can convince retail to come in with more money and increase the float in terms of the volume in terms of dollars. Well, that's, you got to remember that's something that needs to happen. So the raise, the subsequent placement redemption right, confirmed in the company's own 8K language, not just the exhibit, on any subsequent placement, including at the market sales, Alto can require up to 30% of gross proceeds applied to redeem at 115% of outstanding value. On a $30 million raise, that's $9 million. More than the entire face of the note. Cash at a premium, no shares crossing the tape, listing intact. Well, that's vague. It says it's higher than, it's higher than the face. That's right. Okay. So layer section 5C. Any issuance below the then current fixed conversion price ratchets that price down to the placement price. So Alto gets repriced to the new money's terms and takes a third of the gross off the top. So what can be stated accurately is this. The exit Jolie Khan is equipped to deliver is a capital raise, not a conversion grind. Maybe. And the note is drafted so that a capital raise pays Alto out automatically at a premium with Alto not lifting a finger. That's not speculation about her intent. That is a reading of section 6C next to a resume that says 300 million pipe plus 250 million in equity, if that actually got raised, linked instruments at her last company, and a June MOU pointing this shell at AI compute and Bitcoin mining. So maybe she's here to turn it in revolutionarily into a new company. The November 13th reset deserves more attention than it gets, by the way. I'm not sure it's getting any attention. Every 6 months, the floor resets to a fifth of wherever the stock is trading. It's not a floor, it's a stair. So I asked, is the stock at 30 cents a buy? Of course you can't say, but is this stock up just a chance, stock being up, just a chance for the rinse cycle to continue? And the answer comes, you're right. I can't tell you whether to buy it. I didn't ask that. I'm not a financial advisor, thank you, but you are a pain in the ass attorney. But the second question is a structural one, and the structure has a clear answer. I told you earlier that Alto spread is 11% at any price level. That's true in a flat tape. That's true in a flat tape. It's not true in a rising one. And this is exactly why. The redemption price, conversion price, is 90% of the lowest daily VWAP during the 7 consecutive trading days, ending on the conversion date or the first trading day of the monthly period, whichever produces the lower number. It's not 90% of today's price. It's 90% of the worst print in the look back window. I don't know, are you an idiot? Of course that's right. You're so pedantic. But that's exactly how it's designed. And that's, in my opinion, why somebody like the Toad sells the stock down. It's so painful. Why can't we say what's right in front of our eyes? It's just a whole new world. So run it. If the stock was working around 21 cents and it has just moved to 30 cents, the lowest daily VWAP in that trailing week is still roughly 21 cents. And the conversion price is 0.189. Sell into it at 30 cents and the growth spread isn't 11%, it's about 59%. Can I translate that for everybody? If the market, by a press release and a dramatic change, can convince retail to come in and ramp the price up for a few days, the Alto or maybe the Toad selling machine can sell into the retail buying at 30 cents, but their conversion price doesn't go up. It still remains approximately the same because it's tied to 80 or 90%, of the lowest volume weighted average trade, the lowest day. So while you're paying 30 and 31 cents, they're selling it to you and they're going to go convert the stock at 19 cents. So if the stock was working for Alto at 21 cents and the stock has just moved to 30 cents, the lowest daily VWAP in the trailing week is still roughly 21 cents. So the conversion price is 0.189. If Alto sells into 30 cents a share, the gross spread is no longer 11% like a flat tape. The gross spread is 59%. You should annualize that if you want to have fun at what these thieves do. A sudden move up doesn't compress Alto's margin, it widens it mechanically for a full week after the move. The instrument is drafted so that volatility to the upside is a gift to the holder of the note. And a pop in the price of the stock supplies other things the grinding needs, the grinder needs, the grind needs. Price is only half of it. And listen to this carefully here. Price is only half of it. I'd say it's less than half of it. Distribution needs volume, volume, volume. You cannot push 4 to 5 million shares a month into a 46 million share float on 200,000 share days without cratering your own exit. The poor Frenchman can only see things happening in an honest way. All right, I skipped this one. I skipped this one, but we can take it out of sequence. The AI cannot confirm that Ms. Khan was hired to help facilitate Alto's exit. But what can be documented is this. The lender holds a consent right over who sits in the CEO's chair. The company has now twice described this financing to shareholders without mentioning that right. The successor's specialty, that's Ms. Khan, is precisely the transaction the note is drafted to harvest. And the board is asking shareholders on October 6th to remove the last structural limit on the lender's position. It's consequence, not mechanism. So Monday, August 10th, the 8K is due, and it'll tell you Alto's consent waiver, maybe, a board seat, maybe, Shen's still a director. We'll have to see. August 26th, the proxy mails, reverse split proposal, is it added? Is the section regarding the default disclosed to voters? Late August, September, possible minimum cash 8K. I have a feeling they're going to get that revenue in the door in time, that doesn't enter into it. That would be my guess. But if it doesn't, within 4 days, they've got to report that they fell below 500,000. October 6th, special meeting. The cap is removed and there's a split if it's added to the proxy. And then November 13, the floor price is reset and the floor recalculates at that time to 20% of the then current minimum price. And that's a fresh 80% of the downside. By early December, the split, if it's been approved, is effective. Or if not, the December 28 deadline with the NASDAQ fails and sayonara. And the note matures on May 13, 2027. And it might be, if they did a split up here, that from when they did a split to when the note matures, it exists in the no cure window post split. It all looks kind of tough unless she is going to do a pipe. But then you got to ask, what are the pipe holders going to get? So distribution needs volume. News-driven pops in stock share value solves that issue. A new CEO, a crypto-adjacent resume, a pending AI compute MOU in Alberta, that is retail attention, elevated volume, and a tape with bid depth. The registration went effective June 22. The final $1 million was released. What is that registration? It gives them stock free to trade. The shelf is live and covers 16,531,931 shares. Everything needed to distribute those shares is already in place. What was missing was liquidity, was that volume. So only you can decide, is all that possible read that her appointment leads to great things just an attempt to provide liquidity and volume, or is it real? At 18.9 cents, a 1 million monthly conversion is about 5.3 million shares, or roughly 11% of the float, every month, priced off of last week's low. So, is the move a chance for the cycle to continue? The honest structural answer is that a price and volume event is the precondition for the cycle, not an interruption of it. Whether this particular one is being used that way, no one knows. Whether it could be, the note answers it plainly. So the precedent has already run to completion. You don't have to guess how an operator with this resume, Ms. Khan's, how an operator handles a busted microcap. Agriforce ran the whole arc under her leadership. Agriforce was down 95%, trading near lows. Agriforce in September 2025, Ms. Khan rebranded it to AVAX 1, and they announced a $550 million pipe plus equity link. I'm not sure it happened, but it must have, because and maybe it did. And that was Scaramucci backed. Is that the man with the golden gun? Stock runs that day when it's announced. The stock runs up 220% intraday on the announcement. It went from $2.41 a share to $7.71 a share. On November 20 of 2025, the name was changed and the ticker was changed. That sounds like COSM. On January 2026, the first public validator node, 14 million of AVAX was staked. July 3rd, 2026, Ms. Khan, the CEO, resigns by mutual agreement. She gets $160,000 in cash, and 250,000 in unregistered shares. I believe that means, it's not exactly clear, but in my lingo, that means she could trade, they were free to trade. So she basically, if she sold them right away, she got 300 and I don't know, $10,000 for her expertise. The AVAX Treasury was under pressure and a replacement search begins. I don't know how you can replace someone with her lengthy resume, experience, and talent. The announcement pop was real and the pop was large. It was also, in hindsight, the exit liquidity. 9 months from rebrand for Ms. Khan to resignation. I'll tell you one thing, she's good at commitments. She's a turnaround CEO and she sticks it out. She stuck it out 9 months here. That's pretty hard. It's really difficult. 9 months. That is a public record on all that. So what's the bull case here? If Ms. Khan, if Ms. Khan announces a credible pivot with real money behind it, Finger could re-rate hard. The AgriForce tape says 200% plus is achievable on an announcement alone. That's a possibility. It's not a straw man, but apply your own test to it. Does a raise create a FAR bank? Section 6C routes up to 30% of gross proceeds to Alto at 150% on demand, including ATM sales. Section 5C ratchets the fixed conversion price down to whatever the new money pays. So the very event that would make the equity work is the event that pays the lender out at a premium and reprices its remaining paper lower. The raise is the FAR bank for Alto, not for common shareholders. And I would just add here my belief, there's a whole lot more going on than what is authorized under the note. In the background, I think you have the Toad and other funds like that. It's just opinion. Also, selling a lot of stock that doesn't exist in this daily combine sales and pressing the stock down and creating great wealth away from what happens in the note. The note is what allows them to do it in such a carefree way, in my opinion. So the receipts that settle it, speculation is cheap, the share count isn't. So watch these in order. August 10th, the consent under section A8V, disclosed or not. In other words, will Alto consent to Ms. Khan being CEO? August 26th, the proxy is mailed. Reverse split, is it added to the October 6th ballot? We'll have to look for that. Any SC13G from Alto, the 9.99% blocker means a crossing gets reported. So do they stay under it? We'll have to watch. Cover page share count on the next filing. As of July 10, it was 61,310,361 shares. Every share above that number is a conversion which happened. This is the single cleanest tell, and it requires no interpretation. Q2 full fiscal year 27 10Q period ends August 31. It should be filed mid-October. So you can see conversions, cash, and whether the 500,000 covenant held. I believe it will. They'll just redirect revenue that's owed to them, receivables, that is, if they receive them. So if that share count is materially above 61.3 million by October, the grind is running, and this move was the window the grind needed. If that share count is flat, something else is going on, and we'd have to revisit it. One, on a practical note, and you've already been careful about this with total metals, the October 6th vote is live. I don't know what it means. Describe a FAR bank test. It's your coinage, so let me give it back to you sharpened rather than restated. As a standard you could apply. The premise, the instrument, the financial note is called a bridge. So it's the note, the financing is called a bridge. A bridge is defined by what it lands on. Financing that funds a gap between today and a specified future event is a bridge. Financing that funds a gap between today and hope is a pier. It goes out over the water and stops. The test is one question asked of any company carrying a maturity it cannot pay from cash on hand. Name the FAR bank. Who pays this off? Under what contract? On what date? With what money? Another way to say it is, what's the milestone? And does it change all that? The ability to pay it off, etc. If the company cannot answer in specifics drawn from its own filings, there exists no FAR bank. The financing isn't bridging anything. It's a share issuance with a maturity date stapled to it. So here are the 5 elements. A FAR bank has to have or be all 5 of these elements. If it's only 4 out of the 5, it is a peer. So what are the 5 elements? 4 out of 5 is a peer. So the FAR bank has to be named. A special counterparty or source. Quote unquote strategic alternatives. Quote unquote evaluating opportunities. Quote unquote our pipeline. Quote unquote additional financing. These are categories, not sources. You need a name that you can look up. Contracted. A FAR bank has to be contracted. It has to be a binding instrument. An memorandum of understanding is not a FAR bank. Neither is an LOI, a term sheet, a non-binding commercial framework, or a partnership announcement. If the company's own 8K says non-binding, the company has told you it's not a FAR bank. A FAR bank has to be dated. It arrives before the obligation matures with margin. A takeout that funds the month after the note comes due is not a FAR bank. It's an obituary with a footnote. A FAR bank has to be sized, large enough to cover the obligation plus the burn required to reach it. Companies routinely name a source that would have covered the note 6 months ago and doesn't cover it plus the intervening cash consumption. It has to be properly sized. A FAR bank is independent of the current lender. This is the one people skip, and it's the one that matters most in structured micro-crap paper. The FAR bank cannot be the lender's own conversion right. If the answer to who pays this off is the float in shares to the holder, then the repayment mechanism and the dilution mechanism are the same event. The bridge doubles back to the bank you started on. The hole you're in. The hole you're in. You remember that from leaving Las Vegas. He says, as he's downsizing his life to his ultimate doom. He moves from the Ritz or somewhere, and he goes down the street to the motel, and it's called the Whole Year Inn. But as he's standing there drunk, he sees the name as the Hole You're In. And that, I think, describes the situation of shareholders of Finger Motion quite accurately. But we stated the bull case. Let's see if there's a BS case. So then you've a corollary to the rule, who's on the other side? Who is standing on the FAR bank? Even when all 5 elements are satisfied, you have to ask the second question. Who is waiting there when the money arrives? This is where Finger's Section 6C earns its place. A subsequent placement redemption right that lets the holder demand up to 30% of gross proceeds at 115% does not eliminate the FAR bank, but it installs a toll booth on it. Same with the ratchet under Section 5C. Every step toward the FAR bank reprices the obligation downward, so the bank recedes as you walk. A FAR bank you have to pay a third of to reach is a FAR bank for the lender, not for the common. It's a far, far better bank I go to than I have ever gone. Worked on. All right, here's 2 live cases. Finger Motion. There is no FAR bank on any element. Finger Motion. There's no FAR bank on any element. Pens never work. Survey says. All right, so this is the discussion of the FAR bank. In other words, when you have a financing, does it give you a long walk on a short pier, or does it give you a bridge over the river, the rushing waters? So here's two cases. Finger motions financing, according to this AI. Finger motion, there is no far bank. In other words, the bridge does not reach a far bank on any element. Revenue collapsed 94% to 650,889 in the quarter. Cash was 987,000 against 2.35 million of quarterly operating outflow. Going concern disclosure in the company's own 10Q, the 45 million receivable is not converting to cash at any rate that services anything. Well, we'd have to test that. The blue flare arrangement is described by Finger as non-binding. The only named repayment source is conversion of the convertible note into a 46 million share float. The lender is paying the lender's own self. The lender is paying, that sounds Southern, the lender is paying itself with the company's equity. And any raise that might substitute is pre-told at 30% of 115% premium. Now look at ntrp. This is the instructive case because counsel at ntrp genuinely built something, fixed only $3.88 per share with no floating alternative, par prepayment with no premium, a non-ratcheting 4 million exempt carve-out. Those are real structural wins. But let's go with the Frenchman's always negative. But apply the test. The 14 consecutive cash election path has to be funded from above $3.88 equity or from operations. And Q1 produced 200,000 of gross profit against a 341,000 monthly obligation. So it's named and contracted, but maybe it's not right sized. The far bank is drawn on the map, but there's nothing standing on it. Well, I would point out that that's what the AI sees. I think there are reasons that ntrp's bridge is standing on the far bank, and I'll give you one. ntrp has several deep-pocketed investors who are on the board and officers, but they're also investors. And my understanding is 60% of the company is owned by these closely held investors. They have the money. And one reason I asked, why didn't they put the money in now? Why would they sign this financing or allow the company to sign it? And it was a pretty good reason. You can judge if it makes sense. Now, I don't know if there's some big material non-public thing coming, but the stock price was so low that the concern was allowing insiders to buy more when they already own so much, and at this price opened the company up to potential actions against the company and against these shareholders. So one strategy is to take high-priced debt, and then, I mean, this is one theory. I have no idea if this is happening. As material non-public information is announced and things happen, well, then they can put up money, and enough money to buy out the whole thing without being accused of being allowed to invest when the general public or a normal, rational, reasonable shareholder did not know the information. So it's an interesting thing. I also think they're allowed to sell enough shares. Well, there it says a non-rationing carve out, 4 million, but maybe it's not quite enough. Anyway, we'll follow it. I don't want to get. I'm not here to right now to talk about NextBridge. They brought it up. That comparison was not one I asked for. All right, but I think NextBridge measures up quite well comparatively. You, of course, can have your own opinion. Okay, so the contrast is the value of the test. It separates counsel did good work from, quote, the company can pay, which are different findings. So let's see what happens over the next weeks and months. It may be that in the case of NextTrip, the answer goes from counsel did good work to the company can pay. So what a real FAR bank looks like. Executed and it's an executed takeout facility with a named lender and drawn conditions satisfied. Closed asset sale with deposit received. Contracted auditable annual recurring revenue on the financial statements. A royalty or offtake stream with a counterparty and a payment schedule. Cash already on the balance sheet, unrestricted and exceeding the obligation. So these are some tests in all of our stocks, Railtown, NextTrip, others, to measure by. Why? Because it brings in institutions. Note that your Railtown gate, oh, interesting, I didn't see that there. Note that your Railtown gate is the same test in equity clothing, contracted, auditable ARR, appearing on financial statements, not on partnership announcements. It's got to be concrete. The test generalizes because it's really a test about the distance between a press release and a cash flow. I'm not claiming anyone schemed. I think I am. So the absence of a FAR bank is a documented consequence in the case of finger motion. It survives a lawyer's read. It survives being wrong about motive. And it is falsifiable. That sounds like real science. I wonder if Fauci is falsifiable or if he is science. If the company names one tomorrow, you can print it. So there we go. It's the same discipline that made the finger alto teardown. I never published it. And the reason I didn't publish it is I just didn't feel like it was right. I talked about it here over and over again, but I didn't think it's right to get into some sort of cat scratch fever with, or whatever, a cat fight with Ham or any investors. I just didn't think it was appropriate after I thought about it. So I asked, does Ms. Khan have that kind of oomph course, I misspelled it. Fair question, and it's the right one. The whole thesis rests upon it. If she can't raise, the pivot is theater, and the note grinds away. So here's my honest read. She has the resume for it. I don't know, maybe. But the specific thing she need is the thing that just stopped working for her. So what she demonstratively delivered, the AgriForce raise was real. Okay, it was. I didn't know that. Not announced and abandoned. Under her, the company actually accumulated roughly 14 million AVAX, and they staked over 90% of it, launched a public validator node in January 26, and put up about 2.4 million in preliminary Q1 revenue, more than double the prior quarter. That is execution, I would say so, and not a press release. She also brought Scaramucci, and Skybridge, plus Brett Paul from Coinbase Institutional into a company that had been down 95%. Well, that's pretty powerful. The stock ran from $2.41 to $7.71 intraday. So can you trade it? Can you honestly believe you're going to know how to trade it? Intraday on the announcement. Whatever else you say about it, she got a shell that nobody wanted in front of people who write 9-figure checks. That's genuine oomph. She has the Rolodex. She knows the documents cold, and she's done the pivot end to end at least once. Okay. You got to accept that. That's evidence. So what cuts against it? She left whatever the name was, mutually on July 3rd. She left with a 160,000 lump sum and 250,000 in unregistered shares. Companies that are executing don't part with the architect of that execution 13 months in. The reporting was blunt about context. AVAX under pressure, Treasury plays selling off broadly, the board hiring Zerg partners to find a permanent successor, and putting the COO, in the chair. So the window she raised into may have closed. Her raise was priced in September of 2025, when the DAT trade was hot and Avalanche-specific exposure was novel. But mid-2026, the altcoin treasury structures were trading down, and the marginal buyer had gotten expensive. The $550 million was a target announced. And I didn't either. I've seen nothing confirming the full 300 million pipe plus 250 million equity linked to it actually closed its size. I didn't see it either. So that's worth verifying. Her network is crypto institutional. Or is it? Is it the people that placed her? Is it their network? Her network is crypto institutional, and Finger isn't crypto. Although this Blue Flare up in Canada talks about the second allocation of the, I guess it's data center flow to crypto. I don't know. So Finger is a Chinese variable investment equity telecom shell. And so it's become a shell. with a $45 million receivable, which I think is probably the minutes rolling over. I would say some part of that will come in. A going concern qualification, and a $12.9 million market cap. AgriForce at least had a clean Canadian ag tech story to paint over. Whether Skybridge Tier Money will take a meeting on a People's Republic of China structured entity with a first lien already on every asset is a different question. I know the answer. Well, I can surmise an answer, and I think it begins with NO. You very nice person, but you need to learn 2 words. You have to say 2 words. NO. The first lien is a real constraint. No new indebtedness, no new liens without the collateral agent's written consent. Any structured raise runs through Alto, and Section 6C pre-taxes the gross at 30%. She isn't raising into a clean cap table. She's raising into one where a third goes out the door on arrival, and the ratchet reprices the lender's paper down on the way through. I don't know. I'm skeptical, but she seems to be talented. The scale problem. This is where I'd land the skepticism. Finger's market cap is 12.9 million. AgriForce was raising 550 million into a company that had at least run up to a 771 print. To do anything meaningful here, Ms. Khan needs to raise a multiple of the entire company. And that's where a cram down happens. That's not impossible. Dat pivots have done exactly that. Who dat? But it requires the announcement pop first, then pricing the pipe into the elevated tape, which means the sequence has to be announce, the stock runs up, raise money, and hold it all together long enough to close the transaction. 3 things in order on a NASDAQ deficiency clock expiring December 28 and a note maturing May 13, 2027. So the Frenchman says, my actual answer is she has more oomph than the typical micro cap caretaker CEO, and considerably more than Shen had for this particular job. She's a plausible person to attempt it, but can attempt it and will land it at size required or different. And the base rate on second time DAT pivots into worse tape at 1/10 the market cap is not good. My read is she's more likely to generate a tradable announcement than a closed 9-figure raise. And those 2 outcomes look identical for about 3 weeks, which is precisely the window in which the conversion mechanics do their work. Now, the Frenchman here is assuming the only selling and mechanic going on is what is tied to the note. My opinion, which cannot be verified apparently, is what's happening in the dark and in the shadows and offshore is many magnitudes of this. But you can have your opinion. The tell won't be the announcement. I think the tell is the stock price. it will be whether a definitive, or the volume, the price and the volume, it will be whether a definitive agreement follows it and whether the cover page share count stays at 61 million while retail is watching the headline. Just realize the headlines have sucked you in before. Maybe this time's different. But I said, but China is where Finger could get a big surprise contract. No, if she's connected. It's the right instinct to test the bull case, but I think this one breaks on two facts already in the filings, and neither has anything to do with whether or not she's connected. Finger's China revenue growth does not become cash. That's very interesting. Finger's China revenue does not become cash. This is the killer. And it's in their own numbers. Last fiscal year, Finger booked $24.13 million of revenue, overwhelmingly Chinese telecom revenue. Sitting on the balance sheet at May 31, 47 plus million of gross accounts receivable, 44.9 million net of a 2.25 million allowance. That's roughly 2 years of peak revenue parked in receivables. Whatever the business did, it did not convert to cash. That's a very interesting observation. I wonder if the receivables are something that the Chinese government or the telecoms don't have the ability to pay in cash, so they give a credit and then they allow that receivable to go into buying minutes and reselling the minutes, and it's just a hamster wheel at 3% roughly margin. I don't know. So revenues last year, 24 million, net accounts receivable of 45 million. That's roughly 2 years of peak revenue parked in receivables. Whatever that business did, it did not convert to cash. And the credit impairment line, essentially 523,000 in a single quarter, says the collectability is deteriorating, not improving. Well, I would say that that's making some assumptions that, something here could surprise us too. Those accounts receivable could be released. So run your own test on the hypothetical. A big China contract arrives. It's booked as revenue, converts to a receivable, and the receivable ages. Is it named? Maybe. Connected? Maybe. Sized? Irrelevant, because it doesn't produce cash inside the window. It's a far bank you can see, but you can't reach. Then layer the margin. The legacy business ran roughly 2.9% gross margin on airtime and handset resale. Well, that's not all they did. And maybe that's how you define it. I don't know. A surprise $50 million contract at that structure produces about 1.5 million of gross profit against 2.35 million of quarterly operating burn and a 5 million note. It doesn't cover the burn, let alone the maturity. Well, fair enough. I don't think the AI is able to see evidence that isn't reported, so we don't fully know. You would need a contract that is large, high margin, and cash paying. That's three simultaneous departures from anything the company has ever done. It's a far, far better deed I do than I have ever done. She has no China network. Her documented footprint is U.S. securities law and crypto institutional. Cardozo, sole practitioner since 2002. Tough Built, Marathon Digital, Ocean Biomedical, AgriForce, AVAX One. Those are all household names. I'm not making fun of her. We're just in this. Space. You can't expect to recognize names. Scaramucci, Skybridge, Coinbase Institutional, the Avalanche ecosystem. There is nothing in the record suggesting China relationships, Mandarin, PRC, council work, or state enterprise contracts. Meanwhile, the board did have those relationships, and that is the Singapore Malaysia group, Shen, Wang, Leong, N, Lao, Lo, and Cho. If China were the play, you don't replace the China guy with a Manhattan securities lawyer. The higher is the disclosure. Maybe, yeah, I think that's probably right. But, Martin didn't speak Mandarin, and I'm not sure Martin was the key motivating force behind the company. It might still be those, let's call it investors in Singapore or Hong Kong. I don't know. The direction of travel is opposite. Look what they actually did in 90 days before she arrived. March 18th, Telforge, a Nevada voice and messaging provider. June 2, revenue, quote, from markets outside Asia, unquote. AI and high performance computing. June 4 and 9, Blue Flare, Western Canada, behind the meter AI inference plus Bitcoin mining. August 4, a CEO whose specialty is U.S. digital asset treasuries. 4 consecutive steps away from China. A surprise China contract would contradict the company's own stated strategy as filed. Okay, stupid question. There's also a hard covenant on it. Section 7B9 limits Finger to its existing business or what's reasonably related or ancillary. And the collateral is a first lien on substantially all personal property. Any China deal of size runs through a VIE structure. The S1 already flags for PRC regulatory enforcement and cash transfer risk. Cash trapped on shore in a VIE is not cash available to a 500K covenant in Delaware. These are good points. A bit arcane, but relevant. What would actually change my mind? Interesting. The Frenchman can change his mind. Here's what would have to show up to change the negativity. 1, a signed agreement, not an MOU. Finger has now filed 3 non-binding arrangements in 5 months. That's their pattern. 2, what would contradict the negativity? What would change the Frenchman's mind? Cash terms. prepayment, deposit, milestone payments, not net 90 into the receivable pile. 3, gross margin disclosed above single digits. 4, receivables declining on the Q2 10Q in October. That I think could happen actually, but that's just my opinion. If the 45 million starts converting, everything needs revisiting. 5, Chinese side relationships appearing in the 8K, which is due by Monday. If somebody is hired from China facing or from China alongside her, that would be good. If the Monday filing shows only con and no China appointment, the strategy has answered your question in the company's own words. So I guess I asked a stupid question about Chinese contract. But that's always been the story presented to us, is the tremendous relationships and the potential of large China contracts. But I guess it was a stupid question. The bull case here, the bullish case here, isn't China. It's the crypto AI compute pivot she's actually equipped to run. And I'd give that maybe a 1 in 4 shot at producing a real announcement, and considerably less at producing a closed raise at the size required. A surprise China contract would be a real reversal of a documented, deliberate, 4-step strategic retreat executed by a CEO with no visible China network into a receivable book that has already demonstrated it doesn't turn into money. Well, let's find out about that. It's not impossible, but if you're weighing it as a reason the stock is cheap at 30 cents, the receivable line is the number I'd sit with. My own view is this is pumping up the volume, so that, selling can occur. But I'm trying to see all sides, and maybe I have a bias that doesn't allow me to see it. So I said, why would Alto consent to her placement? In other words, I assume they already did. Because for a lender in Alto's exact position, she is close to the ideal appointment. And the reasons are structural enough that you don't have to allege anything, malicious to lay them out. Start with what Alto actually needs. Alto is holding a $5 million face on a company with less than $1 million of cash, a 94% revenue collapse, a going concern qualification, and a NASDAQ deficiency clock running. The first lien sounds protective until you ask what it attaches to. A $45 million receivable book that has demonstratively not converted to cash, and equipment in a PRC VIE structure. Foreclosing gets you a lawsuit in China and some tea, not money. So the collateral is decorative. The only real recovery paths are conversion into a liquid listed float or cash from a raise. Both require the listing to survive, and both require someone competent to execute inside a document, which Alto wrote. So that frames every reason below why she fits Alto's requirements. One, she reads the instrument. Shen signed the note. Whether he fully understood Section 6C or Section 5C ratchet is an open question. Khan structures and negotiates these for a living. Yeah, on which side of the divide? And her own bio says she represents hedge funds and institutional investors in their investments in public companies. A lender's worst outcome with a floating conversion note is a management team that panics, stops honoring conversion notices, and files a Bazille-style rescission suit. Hey, he gets some press. Impressive. It's a couple of French nun. Ayrton lived exactly that with Genius Group in 23. Warshaw Bernstein, Christian Levine, Bazille Special Counsel, and a SDNY complaint alleging a toxic convertible schemer. Of course, you have to allege it because it's not really happening. Who are you going to believe? Me or your lying eyes? Alto won that one, but it cost a month of litigation. They didn't win. It was settled. It's a whole setup. And ended with a negotiated share delivery. And look at this, cancellation of 36 of the 49 million shares at issue. But no one's, look, as Norm Macdonald said, in all these Catholic Church allegations, everybody blames the priest, but nobody suspects the deacon. Nobody suspects what's going on behind the scene, the toad, the offshore. The 36 million shares canceled has nothing to do with all the selling in the shadows that's already occurred. But anyway, I guess that has to be opinion. A counterparty who understands the paper and works within it is worth real money to a lender. She is, from Alto's side of the table, the anti-Genius Group outcome. All right, so now we know which side of the fence she sits on, potentially. 2, she can execute the reverse split and keep the listing. Section 8A11 makes a trading market default an event of default, which sounds like leverage, but a default that delists the stock destroys Alto's own exit. Again, nobody can see what's happening in massive quantities in the background, but whatever, maybe I'm wrong. Alto needs the December 28 deadline cured. That requires proxy mechanics, NASDAQ notification, FINRA processing, transfer agent coordination, all on a schedule. Shen was a telecom operator. She's done public company compliance work at 4 NASDAQ issuers. And she was CEO, and she's negotiating, and she knows crypto, and she's in with Scaramucci. I mean, she's pretty talented. You got to admit, she is pretty talented. Number 3, she raises. This is the big one. Yeah, but how much did she raise? We don't know. So Section 6C hands Alto up to 30% of gross proceeds of any subsequent placement at 115% on demand, including ATM sales. On a $30 million raise, that's $9 million, more than the entire face of the note in cash at a premium with no shares crossing the tape and the listing intact. Wow. Alto's best outcome isn't conversion. It's a raise it can tax. Well, that's just your opinion. And she is the one person in the story with a documented record of pulling 9-figure commitments into a busted microcap. Well, yeah, but that's different than how much money came in. But again, the goal might be just to get the pump up the volume for enough time to sell. It could be that. Consenting to her isn't a concession. It's Alto's hiring its own repayment mechanism with the company's money. She's not a shareholder advocate. She's not a girl who misses much. Doo-doo-doo-doo. Nothing in the record suggests she'd fight the note. So now we know what side she's on, or seek a rescission, or run a no campaign against the October 6th proposal. She'll present the share issuance proposal to shareholders as the board's recommendation, which she almost certainly will, since the alternative is cash redemptions at a 7.5% premium the company cannot fund. The point most people miss, everybody misses it. Who reads these bloody 300-page documents? Section 8A.15. The clause is usually read as protection against the CEO leaving. Read it again. If Martin Shen ceases to be the chief executive officer and no reasonable replacement acceptable to the holder is appointed within 90 days. That's not a lock on Shen. That's a veto over the successor with a default trigger as enforcement. It's drafted so the lender can decline anyone it doesn't want and let the 90 days run out, at which point it gets 125% acceleration, 12% default interest, and the alternate conversion price at 80% discount instead of 90, which means Alto had two profitable options and no bad one. Consent to a CEO who serves its recovery, or withhold consent and collect a default. The only losing move for Alto was Shen staying in the chair while the company burned towards 500,000 K or below that number as a covenant. This asymmetry is the story. A holder who cannot lose either way is not a lender in the ordinary sense. It's a party with governance rights it did not pay for, and shareholders were never told about it. Well, I don't know that Alto consented. It's the strongest inference from the timing. A company doesn't announce a CEO change into a live keyman default clause without clearing it, and no competent counsel would let them. But it is an inference until Monday's 8K. It's going to either disclose the consent or a waiver, or it won't. So we can't say she was selected by Alto rather than improved by it. Those are different facts. Note what the September proxy will have to reckon with. Shareholders are being asked to authorize issuance above 12,256,260 shares. Remember that cap we were told about? To a holder that, per the note, holds approval rights over their CEO. Whether the proxy discloses that is a disclosure question I would look into. The note gives the holder a veto over the chief executive. The company has now twice described this financing to shareholders without mentioning it. And the successor's demonstrated specialty is the precise transaction 6C. I don't know. If they call that disclosure, I guess I'm not washed up. The arithmetic, Form 8K is due within 4 business days of the triggering event. The appointment was effective August 4. The release said effective yesterday on August 5. So, counting business days from the 4th, Wednesday the 5th is the 1. Thursday the 6th, 2, Friday the 7th, 3, Monday the 10th, the 4. So Monday is the last day. It could land any time before then. Today's announcement went out as a paid Globe Newswire press release with no accompanying 8K. That is a sequencing choice that's allowed, but it means the market got the narrative version. A seasoned NASDAQ senior executive, pivotal juncture, several days before it gets the disclosure version with the comp terms, the board seat question, and whatever item 5.02 says or doesn't say about the note holder. So when the 8K posts, look for any reference to Alto's consent or waiver. If it's absent, that's the third time this financing has been described to shareholders without mentioning the veto. Whether she also joins the board, that's different obligations, different signal about how much control is shifted. Notice her comp structure. Is it cash versus equity? Whether there's a transaction bonus tied to financing. A raised contingent incentive would be the single most informative line in the filing. Look for Shen's status. He was elected a director in February. Does he stay on the board or leave entirely? 5, Hugh Han Lee, still CFO, secretary, and treasurer? Item 404, related party disclosure, if anything. If it slips past Monday without filing, that's its own story. A late 8K on a CEO transition at a company with a going concern qualification and a live shareholder vote is not a clerical matter. No one suspects the deacon. All right, this is my opinion of what goes on. This is my opinion. And these notes provide cover. Yes, there's the real live stuff happening, but I think from tag-alongs to day traders to people that can afford algorithmic trading machines held as servers at a some air conditioned room. This is what I think goes on. And I think a lot of illegal harvesting of retail's money goes on. And I think it's protected too. But here it is. It's these combine machines. This is the reaping. It goes on and on and on. In this case, look, there's a man doing it. And everybody assumes it's the priest. Nobody suspects the deacon. Everybody assumes that it's men and women doing this. I think, I can't tell if there's a man or a woman in there, but I think this is run by a robot. This one. This is run by AI. It's got all sorts of cameras. I think this is a machine that's run by AI. It's run by machines. That's who's harvesting you. That's my opinion. And here is a robot actually harvesting. I think this is probably the least efficient way of doing it, but there is a robot doing harvesting. And finally, this is an artist's rendition. But here's a robot doing the harvesting. And that's what I think these notes are set up for. I think that's what the pumping, whether it's intentional pumping in a bad way, but any promoting, any getting the buyers in, talking about things, and you've lived it in finger motion for 3 or 4 or 5 years. You continue to live it, and you continue to believe that it's going to go up. Now, there's obviously a chance that she's here to bring in Scaramucci and a pipe and some sort of treasury strategy, and they're going to raise enough money to buy this all out. And all of a sudden, you've got a company run by one of the single most talented CEOs resume I've ever read. And it could be true. But it also is equally possible, just like I think it's possible that Peter Boards was put in the situation he was. I personally think the receiver was there in the GTII case. That's my opinion. And she may be here to effect an exit for Alto, and more importantly, in the background, funds like the Toad. That's my opinion. So what I would do, I would see this as a huge opportunity to convert finger shares into Railtown. Have you heard it before? Ask yourself one thing. Can you trade finger if for one day it goes up 200 or 300%? You're not going to get out. You're going to think it's going to go up to $1,000 or something. So you're not going to sell. Why don't you just take advantage that the thing is up and sell into it? I mean, there's a narrow way that something good is happening. And that's you take that risk by getting out of it. But by getting into Railtown at more than 1-for-1 now, Railtown doesn't need all this hokey pokey. It doesn't need Scaramucci. It doesn't need Goldfinger. It doesn't need Khan. It doesn't need Red Legs. I never. Who was the captain? I can't remember his name. I'll think of it after I sign off. But they don't need any of that. Railtown is just, we got to get through August. And I think around when everybody gets back to school, the money in AI and all the money sitting on the sideline is going to the orchestration layer. I'm too tired to go through the story, but I think you have an opportunity at better than 1-for-1 to move your finger motion into Railtown. If finger motion runs, how high is it going to run? And are you going to get out? And how long is it going to run? If it goes up 5x from here, it's $1.50. Are you going to get out? Maybe. Or you're going to hold on because it's going to 8. Well, Railtown, as soon as the blackout of information, but as soon as hard things hit, 150, they may take the Railtown train right through the station and tell everyone to back off from the ledge as the train goes through. And it's going to 250, it's going to 5, it's going to 750, 10, 1250. And that, you don't need to be in finger. You don't have to make the money back that you lost in the same vehicle you lost it in. And I would take every advantage over the next days to swap in, take your losses, swap into Railtown. Now, I'm open to the idea that there's some magical solution here, but I think she's there on behalf of what we refer to, I think, a little limited as the shorts. I don't think she's there on behalf of the longs. I don't think she's there on behalf of shareholders. And any financing that's going to come is going to be big crammed down city. So I think you're the gods of the micro crap area have given you a chance to swap out from, I think, a car crash into a powerful locomotive that's going to get you there and beyond safely. I didn't have time to talk about total metals. I was really on about 2.5 hours sleep, doing work on the gold company, and just not for the first time, but just having to process everything, and then just being on the phone all day. I really wanted to talk about finger because I have to face that I told people over the last 2 or 3 days to make those swaps, and the stock's up. So what's going on? My opinion, it's more of the same, more of the same. I didn't really get a chance to talk about Railtown, but we all know the story, and it's getting repetitive. But I think what's going on with Railtown is our final nightmare arbitrage, which is time. That's what we have is time. And we've also given up the value of our account over, I don't know, at least 9 months. But if you go back longer than that. But our asset hasn't disappeared, and none of this shenanigans has to go on. There is no toxic lender. The same grim reaping, the same combines are plowing the field, but they're just robots. They're just doing what they know how to do. They're not projecting AI, projecting orchestration layer. They don't even see orchestration layer in the description. That's all about to change. And when it changes, I think it's going to change like you're, I don't know if you've ever water skied it. I'm not good at it. And you're sitting there in the water and you don't know why you fell off and the boat comes by. And I did it I did it in Tennessee on that river. Uh, Darn it. Where all the houseboats are and all the cigarette boats. And the name of the lake is, my brain. I got a Biden brain. But I went out and I water skied without water skis, and I'm not a water skier. I use my feet. But you're doing it. You're a little embarrassed. Your skin's pale white because you haven't been out in the summer. Lake Cumberland. But you're sitting there. Are you ready? I'm ready. And there's this long lead of rope, and you're trying to crouch. You're trying to be ready, and you're just sitting there, dead in the water, trying to stay afloat. And the rope is going, and there's, I don't know, they're talking about something there, and the two sons were either number 1 and number 3 in water skiing championships, or number 1 and number 2. One of the sons dated Taylor Swift briefly, and so you're there. Oh, get me out of this embarrassing situation. And you're dreading it. It's the opposite of what we're doing here. But all of a sudden that boat hits and that rope hits, and there's a little bit of a lull as the guy is trying to handle it, but there's tension, and he's trying to give you enough to get up. And as soon as you're up, man, it's going, and it's full, and you're concentrating, and you're full speed, and you're down the river, and you're getting out where the cigarette boats races, and you have to turn around and you fall back down. But that's what's coming. Went to Railtown. It's going to be the sudden, maybe a little gradual, but all of a sudden the tug of a powerful engine, and the pull is going to tighten, and it's going to take the stock to levels that finger isn't going to see again. And I know, have you ever heard of Ms. Khan before? She's the most wonderful CEO that ever existed. And she's got so much talent, like all of the modern women do. They're great at everything. She can do your securities law. She can lead. She's a leader. It's easy being a leader, just held down by the patriarchy. But she's a leader, proving it. She can be CEO. She can be your accountant. She can negotiate for you, and she represents. She can work for the drum major at Genius Brands. And what did she Genius do? She got a settlement in 30 days where everyone walks away scot-free. Who's zooming who? Who really stuck the knife in first? But you're getting all confused by it. Hey, she's got crypto. What happened to that crypto company? And the news doesn't say she raised all that money. And Scaramucci. I should put out a press release and just throw in the name. What's a good name that's popular right now? Throw in the name Mark Cuban, who I don't like, but Mark Cuban. Hey, that's great. Hey, there's a chance. Don't you see? Retail is being played over and over and over and over again. I think, in fairness, this is the only market that CEOs have. And attorneys, there's too many attorneys in this country. And they need to make money. And they were told that they're worth all this money because they passed the bar, which I don't particularly see as very hard. I don't see that it's hard to be an attorney, but you got to work hard and know all these things. So they're God and they got to be paid. Well, there's not enough jobs. So they got to do this dishonest work. Oh, you can't say that's dishonest. You can't say that. They're just, yeah. We'll see. Or I never will see. But let's see if they ever meet the big man upstairs and they have to answer, what did you do all your life? Well, I found loopholes, and every time the regulators came up, I got a workaround. So what did that accomplish? Well, my clients were able to steal, conservative estimate, somewhere around $1 billion to $2 billion worth of dollars out of the market. Well, who did they get that out of the market? Well, it was all the retail people. But, you know, it was disclosed on page 219 in a filing. And, you know, they should have known better. I mean, it was their decision. Well, if they're willing to take that chance, my guess is, at a minimum, it's purgatory. And I would say it's probably worse than that. But they have to live with themselves. What you and I have to do is recognize what goes on. And if you want to get fooled again, that's my read on it. If you want to get fooled again, keep your money in finger, buy more, and wait for a miracle. Now, if she does work some miracle, how high is the stock going to go? And for how long? Are you going to trade it? Are you going to trade it well? Give me a number. The stock's 30 cents. Is it going to go to $3? That's 10x. That's a hell of a move. Is it going to go to 30? It's never done that in my, I don't think it's ever gone to 30 unless there was a stock split somewhere there. Is it going to go to 30? Are you going to trade it? Or are you going to wait for 3,000? The company is either going to stop doing top-up business at a 3% margin, and maybe she can because, man, I was impressed. She can do everything. So maybe she can redeploy that $40 million. You know, maybe she's better than Cohen at one of those, you know, AME, GMC companies. Maybe she's the genius that knows how to deploy $45 million of receivables into crypto treasury. What genius. Michael Saylor isn't apparently doing so well with it, but she can. Okay, maybe. So how high do you think it's going to go? $30? On how many shares? We don't even know the denominator. But let's say it's 75 million shares by the time this is. Let's say it's 80 million shares. That sticks in my head as whatever, something like that. And it goes to $30. $240 million market cap. Is that what Finger Motion is worth? Based on a 3% margin on lumpy revenues that were 24 million last year? I don't know, maybe it is. But maybe she's going to bring in this remarkable transformation without issuing shares to whoever brings the money in, buy out this toxic, and the total or whoever's in the background is going to give up. And it goes to $250 million in the next, what do you think? The next 90 days? What, 6 months? And you don't want to be out of it? You know what you got coming in Finger Motion? Other than they're churning out of it, you've got tax loss season coming up at the end of the year. And then you've got September, October, November. And I just read to you a couple of the things that are coming up, but it's probably a reverse split. It's probably NASDAQ deficiency. But she, the good thing about her, she can handle the filings. She can do the auditing. She could write up the press releases. And she can even go defend the company as a securities lawyer. And on top of that, she can negotiate the contracts and she can bring in crypto. It's amazing. Amazing. She can do everything. Is she going to do all of that? I don't know. It's possible. And it might be that I end up having egg on my face that the miracle of all miracle stocks goes from 30 cents. You didn't tell me what you think it can go to. 30? 300? If it goes to 300, it's a squeeze. Do you think Finger Motion can have a squeeze? Based on what? They just did 45 million according to my service in one day. Of course, when I searched it, it said it was 24 million. But that's all the hiding of shares. You think it's going to squeeze? Is there some compliance officer out there that's going to buy it in? Maybe you're right. Maybe the guys in Singapore are paying $10 million to some offshore desk and then putting up $100 million so that the computers can start trading on the buy side, and they're going to time it with an at-the-money offering from maybe Univest. They're going to get the stock to go to 30. But what does that mean? They're going to raise money. But will it go to, maybe this is the one that does an HKD and it goes to 1,000. Are you going to trade it well? Is it likely? I don't know. Only you can judge that. I think any number you pick that's reasonable, not those short squeeze numbers, any number you pick, from 1 to 5 to 10 to 15 to 20 to 25, 30, 55, and believe it or not, even higher, you can get all of that upside in Railtown. And you can lock in your losses, which are valuable, and you can stop torturing yourself. Railtown doesn't go up based on manipulated CEOs and press releases. I will say I, there's a pattern that you can say is the same, but I don't think it's their fault. And I would say they did put out a whole series of puffy news things. But my opinion is they were told to do it by their attorneys. It's neither here nor there. But you can see a little bit of the pattern, but it's why did they put them out? Did they do it to manipulate? I see no evidence. If you were to tell me that Corey Brandolini has been trying to manipulate the price of his stock for the last year and a half by press releases and by offshore mechanics and by hiring promoters, and I would have to ask you, where's that evidence? I don't see any urgency to do that by Corey. Now, I think there's a lot of urgency, and I think he's worked hard, his whole team. But I think he's following securities law, and my guess is he's following, if I had to guess, it's government funding and government AI for all with the Ruffalos and the Nobregas and of course I heard that big investors in this space said that the AI guys, they know what they're doing, but that Railtown, those guys don't know what they're doing. I think you're about to see how smart and brilliant Corey and Marwan and all those guys and Dr. Rambling Jack Elliott are. But I don't think you're going to see it necessarily in August. You could, but so anyway, that's why I'm trying to talk about other things as well. I do think in this market, there's probably somewhere around, I didn't know any basis to come up with a number until I was researching it, but I didn't publish it. I worked for quite a while on what I could find on Lynn Partners, and I couldn't find all of it at all. Sorry, but out of 19 financings in the last sort of recent time period, 2 to 3 worked for the company and for the shareholders. The rest were all disasters. I don't know what that percentage is. 3 of 20, I don't know if that's 15%. I suppose it is. So somewhere between 10 and 15%, maybe it's slightly higher, of these CEOs know what they're dealing with, but also have a strategy. So there are companies, and I would say it's going to be in the resource space. It's probably going to be some of the technology space, particularly AI. It's going to be, I'm really starting to see a good story in Next Trip. I'm not going to do it tonight. I want to read to you the pushback that I don't think it was the Frenchman. I think it was, it might have been the Frenchman, but I think it was the Afrikaner. I have it here. It pushed back on what Chris wrote. I hope he takes it in good humor because it's not all bad. But it's just the skepticism of AI when they cannot find the information. So I'd like to maybe have an interview with one or both of the leaders there. I want to have one or two interviews with Total Metals. I really want to have an interview with Corey. And I wouldn't mind branching out into maybe some other stories, but maybe into some other advisors. I just like to do more than talk about the same stock and the same thing all the time. And I can't wait till I can have a better setup and maybe afford a producer so I can get away from the negativos. But I do think there's opportunities here, and my main goal has been and continues to be, and I haven't gone in and tried to poach anybody else's audience. I haven't tried to well, I guess I have spoken pretty sharply against people who I perceive as a threat to this community. But I was going to say I haven't gone intentionally to, have some sort of personal back and forth. I have named it because I want you to recognize it. But for most of you here, you have learned to do your due diligence from the top. In other words, what is this company worth? What's the market worth? Blah, blah. And then you ask the critical questions, and then you divide the answer by how many shares are out there. Then you look at the stock price. But we also have to operate in this murky world. What gets it out? Institutional buying. And I've gone through what causes that. And it happens. It does happen. But you can't just go from stock to promoted stock to promoted stock to I heard this, I heard that. Look what happened to COSM. It bothers me so much. That CEO took about 34 million, 36 million out of the market, this Greek guy, on a specious story. But he did it. He did it. And it helped the schemers. So most of you have learned how to do that, and I'm impressed by it. But there's one other lesson which we will do in the future. But if you're putting a portfolio together, if you're an institution, a private equity, an investment bank, or a fund, or a venture capital, you make your parameters, and maybe it's a specific area or you're a generalist, but you go in trying to put your money at work with a minimum X in mind. Maybe it's 100X. Every deal you do, you want to see 100X, or maybe it's more reasonable. You want at least to see 20X in the upside, or whatever your mandate is. But then you have to do the thorough due diligence. And of course, you don't invest in companies intending to lose money when you're in these portfolios. But you know that over time, you're not going to invest all at the same time. But over time, as you do, the hardest work you can do, the odds are if you do 12 of them, 6 are going to completely crap out. 0 back. And then the other 6, the remaining 6, you might have 1 or 2 that give you something back, but they're still essentially a loss. So you're up to 8. You got 4 more. Maybe there's 1 or 2 that give you even or 10 or 20%, or maybe the third one gives you a double or a triple. That's not going to make up for all the other losses. But that final one, and you don't know if it's the final one, it might have been the first one. But that final one gives you 100x, gives you, if you hang on to it, maybe 1,000x. It's the one you read about in the paper, such and such, so and so invested in Google, so and so invested in Bitcoin, or so and, but you never hear about all the other losers. But the key is you hold on to that one. That's your performance. If you listen to these people and you sell, well, no one goes broke taking a profit. Well, look at your portfolio over the last 5 years. You've already lost the 10 or 11 or 12 or 9 stocks. You've already been wiped out or nearly wiped out. And I think Finger's one of them. I think Finger's in a category where you had a chance, as did I, and then it's round tripped. And it's got a dead cat bounce going on. Why not get into that final investment, which could have been any one of them, but that final investment that can give you 10x, gets Railtown to 250. If Railtown goes to Lang Chain's value of a year ago, it's 550. And people can say, yeah, but technology is sped on, Lang Chain got there first. I don't know. I think Railtown's advantages far exceed Lang Chain. But I would also point out that the market is big enough for all of them, and that orchestration layer is what private equity is hoarding, because that's where everybody's going. So portfolios are going to be realigned after school, after all the vacations. And I don't think the computers see Railtown right now. But when they do, the screeners do. Railtown is now classified in with 5,000, 6,000 SaaS companies. They're a dime a dozen. But as soon as Railtown is classified, so the computer screening that goes on every day, they see orchestration, but they see maybe that it's on the data centers, right? Whatever the word, the description is that triggers Lang Chain and Vercel and others to have these high valuations, I think it re-rates. And I think Lang Chain's probably already worth, I don't know, $10 or $15, but we don't know that. So just what it did a year ago, 550. Well, what's that from this price of Railtown? That's 20x, 20x. 20x is unbelievable return. But what is that? What does 550 do? Well, if Railtown does what I think, and it's on volume and it's 550, it brings in the institutions. And all you need is 1 or 2 institutions, hopefully out of Canada, but probably out of New York, each wanting to own 5% of that company. 4.99. That's 10 million shares. There's no stock for sale. Maybe the guy that asked me what I'm going to give up, maybe he blew it out. But that's a long time ago. There's no real stock for sale. And when institutions start buying, other institutions copy because it's in the filings. And when institutions buy, they buy for 5 or 10 years. They don't buy for a flip. So it changes the whole dynamic. But if you want to look at it another way for Railtown, I'm too tired to go too far with this, but TELUS is projected revenue from, of course, it was the last CEO, from AI related technology is supposed to be 2 billion by next year, by 2028. So what does that mean? What is their AI enabled technology? It's their data centers. And yes, though, they do probably have some consulting. Yes, that they have that Fire IX. What's holding it up? I guess it's the CEO change, but I think it's Canada. And I think it's the June 1 deadline and then the holidays and all that. But after everybody comes back to school, who knows what kicks it off? But just focusing on TELUS, if Railtown is that interface in the stack, Zaid Atufat Shamsi built the stack. He's on the advisory board at Railtown. Why did he join the advisory board at First Cell? Why didn't he join LangChain? Why didn't he join any one of the 6 or 7 other, 12 other companies racing to get in the space? I think the answer is self-evident. He selected Railtown for the NVIDIA stack. What if they're all waiting for the Vera Rubin stacks to come in so Agentic AI to Agentic AI works at, I forget, 8 times the efficiency, 8x. I forget the number. That's all going to happen September, October, November. Just tell us, don't use 2 billion, use 1 billion. And let's say that Railtown is a critical part. If it is, I'm making a projection. Let's say they get 20%. That's, and the PR said they are in a partnership. That's 20% of $1 billion, and it's growing. It's sticky. That's 200 million. Well, what multiple do you put on a nearly 100% revenue that's growing in AI in the orchestration layer? LangChain went out at 85x, but it's somewhere between 25 and 50. But those multiples could change if the so-called AI correction comes. But at, let's say, 25, not 15, not 35, let's just say 25. 200 million from TELUS, projectable, gives a valuation of $5 billion. There's 234 million shares outstanding. That's $21 a share. Now you could say, well, TELUS isn't going to do it. Nothing's happening. Rimouski's sold out. Kamloops is never going on. Okay. Well, what about Buzz Hive Digital, which is possibly Bell Canada, that Dr. Tom Core, as Director of Business Development, has posted and liked at, I think, at least 50 or 60 times. You can go back through his LinkedIn over and over and over and over again. What's he going on about? Is it because he owns shares of Bell Canada? What if it's their data center? They announced everything, Cohere. They announced, I don't remember if it was NVIDIA, right, frankly, but they announced every layer of it except the orchestration layer. Is it happening? I think so, but we don't know. But what if they announce and Railtown is the critical piece? Now, I've seen different revenue projections that are going to come from it. Very high. 4.5 billion, 7 billion. So let's just take, I don't know, let's just take 2.5 billion, not the 4.5, not the 7. I think it includes Sweden and Paraguay. It might not, but let's include all of that and Canada. 2.5 billion. Let's do it times 20%. That's 500 million in revenue for Railtown. From that, if you want to just throw away TELUS, well, that's $42 at 25x. If you want to add those two together, you say it's 500 million plus 200 million, that's 700 million. I think that's $60 a share, but call it 700 million. And if you want to be negative, call it 15x. 700 million times 15x gives you a $10 billion valuation for Railtown. Now, the point I want to make is that's two clusters. That's two data centers clusters. And I think they're low projections, by the way, but that's two data center clusters. Add one more element in your thought. What if Railtown's conductor platform proves that a country like Canada can create a counterweight to Microsoft, AWS, and Google and SpaceX by the rapid transferring of electrons and agents and tokens and spend and compute between the big hyperscalers, if that's where it needs to go. Remember, it's cost, it's safety, security, and it's redundancy. And it's a trust factor of data. It's all about the data. And what if by combining a lot of data centers in Canada, they can show that it can be a counterweight and it provides that sovereignty. And I think sovereignty is the nation, but it's also, I think, a term that describes the vertical, keeping your data on your own company servers rather than in the internet or your own company's cloud. Or I'm quickly proving I don't understand all the details of engineering this. But if two data clusters, admittedly, the Bell Hive includes two other countries, the way I set it up, and TELUS, I think, is very low, but it's two data centers. Well, that's 10 billion at 15x. And I think it's a low estimate of revenue. SpaceX bought Cursor for 60 billion. Just as a mental exercise, what if Railtown becomes not only nice to have, but almost de rigueur for any country that wants to have independence from the Cloud Act? And Railtown proves its concept in Canada. How many other data centers clusters would you have to sign up to get to Cursor's valuation of 60 billion? That's probably an overpay. But how many would you have to do? Well, if two gets you to the valuation of 10.5 billion, I guess you need I don't know if I want to figure out that $500 million, but you need 12, maybe a little less, but you need 12 of them. Well, let's go around the world and see if we can get to 12. We have Canada with TELUS, and then Canada with Belhive and Paraguay and Sweden. Okay, that's 2. Can we quickly think of 10 more if Railtown's product catches sort of a viral status? Well, I would quickly put out Germany because Canada is working with Germany, so that's 1. I would put out, let's pick the Kingdom because Railtown has that Brea AI working. I'm not sure. I'd rather my friends were in there doing it. I'd have more confidence. But let's pick the Kingdom. Is Paraguay going to be the only country in South Africa? Why don't we just pick Brazil? That's 3. Why don't we pick South Korea? I don't know about Japan, but let's pick, Japan's a big country. We'll pick Japan. That's 5. We'll pick the United States, not so much to beat the Cloud Act, but the United States is the world's largest economy. Let's pick 2 data clusters. So now we're at 7. Who else? The UK? Yeah, let's pick the UK. That's 8. I don't know. Trying to think of a country in Africa. Maybe Kenya. They've got water. Maybe, I don't know about Egypt. They got the Nile, but I don't know if that's good. Maybe the Congo. Let's just say 1 country. I can't figure out which one. Maybe South Africa in Africa. So now we're up to 10. So we need 2 more. Mexico? Okay, Mexico. I like that one. 11. Singapore or Malaysia or Thailand? India? Ooh, India. Australia? Let's say Singapore. That's 12. You may disagree with me. That's 12 data center clusters around the world, and you can get to 60 billion. So let's just stick with the 10.5 billion. What is that price per share? It's $32. There's a lot of upside in Railtown, and it doesn't have to do all this manipulation. I'll talk about tttmf and NextBridge and the world and other things tomorrow. It looks like there were 6 comments. I missed a bunch of comments. It looks like this is the first one I have. Giuseppe, hey everyone. Hi, I'm sorry. That's the first one I have. Sorry about that. Justin Babish. Hi, Justin. I hope Wild Build isn't talking for an hour already without starting the stream. I was talking, but I wasn't talking to you. I was on a oil oil deal call, and then I was on a community call, one of you guys. So, and then I had some other calls come in. So, sorry about that. I intended to come on when I hit the button, but Ward Richardson, Justin, I was thinking the same thing. I called him a few minutes ago, no answer. It's because I was on a call. Justin Babish, this is very unusual. I hope everything's all right. Not much any of us can do if we're not in the same city. You guys are nice to worry, but I'm sorry. It was my fault. I shouldn't have hit the button, but Giuseppe, last time he forgot to hit start. I did do that. I recorded for, I don't know, 2 hours or 3 hours once without hitting start. It's embarrassing. Justin Babish, not streaming on Rumble either. Same shit. Justin Babish. There he is. Yeah. Giuseppe. Yes. Yes. Fast Eddie. How do you do? Jack Hamilton. Good evening, Mr. William and all RT teammates. Exactly. We're all in this together. There's G Diddy. Oh, 5,000 shares of TTMF. All right. We're starting to get it. I'm going to have to start reporting it. We have a position in that. I think TTMF is so cheap, 14 cents roughly, and not the gold hasn't gone anywhere just because there was a forest fire. I was saying buy it at 20 and sell half. I think if you buy it at 15 cents, you could sell a third and get your money back, and then wait for this drilling program. If it runs beforehand, you could sell another third. I think once the drilling program gets started, there's going to be a lot of excitement in the stock. And I don't think it's going to take that long to drill into kind of proving up. Well, at least getting the chattering going on. I'd say 4 to 6 weeks. And the two things that are possible then, 3 things. One you got to be aware of. I think they'll raise money at some point because they're going to need money to keep going. It's just how resource plays are. So that's why I give you that strategy. But the second thing is if their drill bit proves what they're looking for, I think the stock could be $1, $2, or $3, which is a nice move. And then the third thing is there's a major that owns like 85% of the properties around there. Nobody knows the name for sure because they use nominee accounts to buy, but or to lease is a better word. But I think that major will either buy the project or the company. I don't know when that would happen. I don't know if it happened this year or anything. But there's a lot of excitement there. And I did try, and I'm gonna try to do it again. I want to figure out how much gold per share is the current number. And I got a low number, but interestingly, I got a low number in terms of ounces of gold per share. But interestingly, you don't need a big number to make the stock price much higher. And I was ready to show you all of that, but we got off on, and I lost the. It's hard to go back and find everything. Looks exactly the same on my files, so I'll try to do that again. But what I'd really like to know is what could the program, this drilling program, do to that same per share number. That's very interesting, and I think the upside's a lot. The risk is, what are they going to do for financing? And they got to swim in the same pond, but I think they will not do a toxic financing. But I can't control that. That's something but they know that they shouldn't. And I'll get him on. He'll tell it to you in the interview. But that's the one thing to look for. As long as they keep that denominator known, we can figure out what each share's worth. Justin Babish, I don't think the marketing firm was to penetrate Canadian business, but all likely networks in segments that can benefit U.S., Europe, and global. Yes, Justin, you're spot on with that. I try when I'm making my projections, even when they're so absurdly high, I try to limit it so that there's a margin of error. Notice in those projections I just gave on the data centers, I didn't put any number on revenue from what that marketing firm's going to give. I didn't put a single thing. But I think it could be that in and of itself is enough to make a company. I think Railtown's going to have 3 or 4 or 5 sources of revenue that each could make a company on its own. One source, the kind of service-led consulting, which ties into this, that might have a lower multiple and lower excitement, but it might not. It just depends, Justin, and you make a good point. If they're doing it in Canada, they could be wherever the accounts are. The accounts could be in the United States. This marketing firm has great success. It could be in Asia, it could be in the Middle East, Europe. You're exactly right. I left out of all my projections what could happen with AIP partners, what could happen in the roll-up, what could happen with cross-selling. Imagine if the government with digital is funding those 200 companies somehow. I left all that out. So yeah, I think you're 100% right. And it's really exciting. It's really exciting. Justin Babish, maybe I missed we only advertise in Canada statement. No, you didn't. No, you're 100% right. I just narrowed it to Canada mainly because that, for now anyway, is Railtown's advantage. Railtown's advantage right now, unlike Langchain or even unlike Vercel's in one silo. I think it's Amazon. I can't remember. And Langchain is Palo Alto, and I'm not sure. It's already in a private funnel. But what can really jumpstart Railtown is proof of concept. And the advantage Railtown has is Carney's AI for All, which I think is $2 billion. This other one that T. Alex came up with, which is $300 million to subsidize AI companies in Canada. Wow. And there's a few others. I bet there's government incentives for AI, sovereign AI, to use Canadian companies. So another reason I use Canada, Justin, is the acceptance rate of AI in Canada is reported at 10 to 12%. But if you read deeply, it's actually around 5 or 6%. In Europe, apparently, the acceptance by enterprises is closer to 35 or 40%. So it's a little more of a virgin field. But I think where Railtown has a real opportunity to ramp is Canada. And then that proves the concept. But I believe, Justin, you're going to see, I don't think the company stopped working just because the bureaucrats in Canada take forever. And I think you are right. You're going to see whatever you want to call them, sales licensing agreements. I think you're going to see them come out. And I think it's not all going to be because of the marketing firm, but I don't think it's going to be limited to Canada at all. I bet you're going to see significant, whatever you want to call it, events in the United States, North America, and Europe. I think you're 100% right. My guess is you're going to start seeing the blackout lifted first with Canada. My guess is it's going to be first some sort of government funding, and I'm just guessing. Secondly, it'll be TELUS. Thirdly, it will be BCE. I've got my eye out on that BCE Buzz Hive. Who's financing those data centers? If it's a big Canadian equity firm, we might see something about that. So I think there's going to be a lot out of Canada. And I'm leaving off the SMEs. But if I had to guess where you could see something happen elsewhere, I think the United States, I think the UK, I think Germany, I think Paraguay, because Dr. Tom Core keeps putting that up, and I think Sweden. And it might be separate from that. And then the easiest, Justin, is the United States, but I think something could come out of the Middle East. I agree with you, Justin, and you're 100% right. When I come up with my projections, everybody makes fun of them, which is fine. I can take it. I'm at this point, I'm used to being alone. But one of the reasons I've told you before, I just did a calculation. I just did a calculation that did 10 billion, and I counted it up to 60 billion in valuation. And then when I did that, I said, okay, let's go with the 10 billion. I literally cut off 5/6 of the calculation. Why? Because I want, and it came up to whatever, $32. Because I want to risk what I'm saying. And one of the ways I risk that marketing campaign, I guess, WSR, is just focusing on Canada. But you're 100% right. It's a global entity. I would imagine that they'll go to the 20% of their client base that gives them 80% of revenue, And that could be all around the world. I 100% agree with you. And when I say that, when I just focus on one or two things, that's not meant to say that there won't be other Justin, I think Railtown is going to get to, so I'll say it, and everyone will end up somewhere that I've lost my mind. Okay, I'll accept that. I think Railtown within, by the end of next year, I think Railtown will exit next year with projections, and that's assuming we haven't gone to war or an asteroid hasn't hit or there hasn't been a complete collapse in the markets. But I think exiting 2027, exiting 2027, I think it's entirely possible that analysts, and whether public facing or just inside of institutions, will be projecting $2 billion a year in revenue at high margin for Railtown. $2 billion. And do you put a 10x on that? Do you put a 20x on it? Do you put a 30x on it? Depends on how quickly it's growing. But if you put 15x on it, a little over 15x, 16 or 17x, I think that works out to $100 a share. Let me see. 2 billion times 15 divided by, it's $100 a share. If you use a 16 or 17x, it's $100 a share. I think it's totally plausible, partly because of what you pointed out. But everybody thinks that's not credible, and they make fun of it. The guy on Discord with his sidekick. Well, anyway, that's how it's going to get there. There's going to be more sources of revenue. And I really think that's what's coming. A projectable and growing ARR of 2 billion forward 12 months. So to be clear on what I'm saying, I'm not saying that the company is going to do 2 billion in revenue in 2027. I'm not saying that. I guess it's possible. I'm just saying exiting 27, it is highly probable to me that the company could be projected to do 2 billion in revenue in 28. And they're gonna need what you're pointing out, Justin. I think it's great research, and it's a great observation that you make. I really do. Ward Richardson, that's right, William. Data centers are not running on all 8 cylinders now. Software will fire up the rest of the cylinders. I think they're 12-cylinder engines. What's this with 8 cylinders? They're 12-cylinder engines. Yeah, you're right. I think so, Ward. Ward Richardson said, G. Diddy, I like your plan. Well done. Let's go back. G. Diddy said, good evening, William. Please add 5,000 TTNF to my total, now 30,000. 10,000 to get original money out, let the other 20,000 ride. Plan subject to change based on company circumstances and price. And price. I mean, I see it as a trade, but you might keep part of it. But frankly, I think the whole company will be a trade. That's great, G Diddy. So it's 5. So now you have 30. Beautiful. I'd love to have the money to play tttmf. I really would. Because I think you can, look, the risk is Railtown goes up while you're in it. But I think tttmf is going, it's 15 cents. I think it could be 45 cents, 50 cents, maybe a little higher, 60 cents or so, when they start drilling and the excitement goes on. You got to be careful they try to do a financing. They might. So that's why I like your strategy. Take 10,000 off and you get your money back. So if you buy it at 15 and it goes to 45 cents, you sell 10,000, you got your money out. And then you see what happens with the drilling program. And you might see $1, $2, or $3 in I don't know. I guess it could be as soon as September. Maybe it's October. But you might by then want to get out and get into. I don't know. I'm not necessarily saying diamond handed. But I would like to ask him if he will come on an interview. What would a takeover look like? And I'll try to get that interview. I've been just kind of swamped the last few days. G Diddy says, thanks, Ward. I agree. That was a nice bit of information. Hey, KYP, welcome here. Ward Richardson, keep in mind when the Vera Rubin chips, the Vera nice Rubin chips, are installed, all software will run 400% faster. Software industry is about to take off like a rocket for years to come. So let's think about what Ward's saying there. And let's add one other element. Ward's not saying it in that in this statement, but all software will run 400% faster. So you're thinking, well, software is going to run like it always does. You fill out a Excel spreadsheet, or you're on writing a letter, or you're on a Zoom, or you're doing whatever human beings do, a search with software. Yeah, that's true. But what Ward's really saying, I think, is that what's coming, and I think it's already here, is agentic AI. Agents working with agents. And so not only is that 24/7, they're going to run 400% faster, which one would presume is 400% more work, although I don't know the law of diminishing returns at the agentic scale, but I don't see any reason why it would slow down. And so what happens in that environment? They need the orchestration layer, whatever you want to call that whole layer. And Railtown does, I don't think, has the whole layer, but the part they have, and this is the part I wanted to get to that Ward's saying, I don't know if he's saying, but it's what pops in my head. The part Railtown has literally, I think, is the metering, the toll booth. The every time a token runs, the click. And imagine if software, Vera nice Rubin, makes it 400 times faster. That's a lot of, an analogy I just thought of is, how did Ken Griffin make his money? He gets a tick on every trade, and he maybe front runs, but his computers just take a piece of millions of trades, and he's bloody rich. What if Railtown just takes a piece of trillions of calls on tokens a month? I don't know what the number should be, but it's possible that Railtown's right there. I'm not even saying it has to be the only one. Harbison, per Gemini. I like the girl. She's always very accommodative. Per Gemini, yes, the July 2026 Hugging Face breach is exactly the type of vector that AI action governance platform like Cinchi's Paramine are built to mitigate. Now, Ward was telling me about Cinchi and one other one that are in the 200 companies of AIP. And Ward has a fascinating concept that I didn't talk about today. But what if the conductor platform and I hate the word synergy, but the synergies of these 200 companies all combined, and not only do they do the original AIP plan, but what if by rapidly putting all these tools together, ADK, they're able to replicate what Microsoft took probably decades in the SDK department, and they have 90% of that. What if, and look, I'm not saying Railtown's the only one, but Railtown owns the AIP. What if Railtown can put together a mini conglomerate, if you want to call it, or a true ADK Microsoft type machine? It's an interesting concept. Sixth Stream, how are you allowed to solicit money for an investment in a mine that doesn't violate Reg D Rule 506B? I'm not soliciting money. When we did, a bunch of us put money into the company 2 years ago, I didn't solicit. They had to contact the company directly, and all of the communication and the paperwork was with the company. It wasn't me. I had no role. Yes, I informed, but I wasn't soliciting. In terms of the investors, the larger investors, they're accredited, and there is I'm not an attorney, and I have explored it, but there is a presumed area where, if you're dealing with accredited investors, particularly ones with advisors, that's different. And again, in the one case, it never happened. Well, in either case right now, it's never happened, but there's going to be full disclosures, and it's all directly with the company. I'm making the introduction, I guess you could say. But it's your words that I'm soliciting money, not mine. But it's extreme. Very interesting that you're a attorney. Are you? Or are you a what are you? I don't know how you hide behind no name. All right. Um, I'll look it up. I'm just too tired to do it right now. I don't know the breakdown of 506B, but I'm not acting in the capacity of a broker. I'm not. There is a well, anyway, I'm not an attorney. I have spoken with attorneys, and I have clear understandings of what can and cannot be done. But rather than, while I'm tired, try to go through it all and misspeak, I'm going to leave it lie. I will look it up and see what the heck you're talking about. But it's your word. I'm not soliciting. I'm not soliciting. Ward Richardson, Cinchi will be a gold mine for RT. Take a look at this company, Cyber Defense AI and Wiser AI Systems. Look for the connection. Very, very interesting. Well, I think Wiser has a really exciting price action ahead of it. Cyber Defense, that's the first time I've heard of it. And Cinchi, I guess I heard of it a couple of days ago. Maybe I got to write those down. I'm so tired. I just want to turn it off. Okay, I'll write them down, Ward. Cinchi. And what is it? Cyber Defense. AI. I like those ideas. Not conversing in them, but I like them. And I certainly trust you guys, all of you. I trust your research. It's perfect what everybody's doing. That's exactly how to do it. Harbison Ward is Dream Security Cyber Defense AI. Ward Richardson, no. Cyber Defense AI is a private company in Canada. Ward Harbison, thanks, Ward. We'll take a look. Unknown Stuntman. Hi, Uncle Bill. Hi, Steve. Justin Babish, did you receive my emails? I saw them while I was on a Zoom call, and I saw it as I was switching from my one link to the other, but I didn't read it because I had to get back on the call, and I do intend to read it, Justin. I literally got off that call, called somebody. I was on that call, I think, for 60 minutes, and then called somebody else. It wasn't as long, and then I came live. So I haven't had a chance to read it. I will. Probably not tonight. Probably first thing in the morning. In Gmail. Yeah, I did see it. What I was having, I saw it here. But I had to sign in here, and it became a nightmare because to sign in here. They sent it to my number to my YouTube here. And when I go into YouTube, I have nowhere to find that number to say yes, because it doesn't automatically pump up. And then the email here. Anyway, Justin, I just didn't pursue it, and I haven't had a chance since I saw your email to read it. I will. I'll read it this morning. Daver, how can you invest when FINRA, DTC, SEC is all corrupt? Look at MMTLP. I agree with that. I think my opinion, Daver, is what I think should happen is that the NASDAQ should be shut down. The over-the-counter should be shut down as profit-making exchanges. I think they should be combined, and the big names can go somewhere else. They don't have to be on NASDAQ. But they should be combined as a not-for-profit. They should be separated from the American and the German and all the link-ups. And I think that the securities laws of 33 and 34 should apply in these over-the-counter, which NASDAQ used to be the best over-the-counter firm. But these stocks that are roughly $500 million to $1 billion, $2 billion. And I think that market should become a government cabinet position. You could get rid of commerce, you could get rid of education, you could get rid of if you don't have room. But I think there's nothing more important than our financial markets for the strength of our economy. And so what I think should happen is it should be run by the government. I'm not talking about a whole lot of bureaucracy. I'm just talking about bringing in the oversight and the compliance that the federal government could bring. Then I think that the markets should possibly be a combination of having a floor with specialists and human beings, and maybe an electronic too. But I think it should be mostly run by people using computers. There should be no payment for order flow, no front running. If you can't get rid of short selling, but I think the idea of hypothecating over and over and over again should not be allowed. I think they should reinstate the UCC Section 8 that Bill Clinton's time frame anyway. They removed it. So when you're trading on these two exchanges, you're trading in shares. You're not trading in security entitlements. I think all the shares should be physical, which I don't think is hard to do. Now, it might be that they're pictures of them electronic, like you have tickets. You can go on an airplane with it electronic, but I think they should all be numbered and divisible and knowable and definable and locatable. Now, how you lend them out, maybe it's once, but it's not a stock loan desk like what these firms are doing. And it's not the other thing, no high frequency trading, no automatic exemptions, no reg show at all. And if a company can't locate shares, they can't sell them. They can't sell them. If the locate, like the law says, has to be in writing before you sell. If you don't have it, you can't sell. As simple as that. Now, I think that if those rules are followed, and then I think the government bureaucracy doing it, if you work for it, you can't leave after 2 years and go work at Goldman Sachs or go work at Haynes Boone. It's a career. Now, once you're older, maybe you can go be a director or something, but none of this revolving door either. I think if you set it up like that, and I might be forgetting a couple of my ideas, but I think if you set it up like that, you will attract small brokerage firms and small investment banks. And you'll get back to a specialist system and a market maker system and a research system. And I think that should be what the over-the-counter in NASDAQ. And if NASDAQ doesn't want to do it, screw it. Just do it with the over-the-counter, and all the small firms will stay there. But it should be the best marketplace in the world. Transparency, number one. And one of the things that might have to happen to get it going is it may not be able to trade from 7 a.m. to 8 p.m. It may not be able to trade all day. You may have to set up 2-hour trading days to create a real price discovery until it's big enough. So you'd have to have that flexibility. I don't think it should be connected with any other exchange in the world. No electronic to Frankfurt, no electronic to Panama, none of it. And all buyers, all participants in financings have to be disclosed. No toxic financings, by the way. None of that. No VWAPs, none of that. Not allowed. Plain vanilla. And I think that market would have so much business. I think it would be bigger than the New York Stock Exchange in a short period of time. And people would have to be trained. But the key thing is that it would rely a lot on people, not computers. Computers would help. There'd be research. There'd be roadshows. There'd be ongoing investor education. And the reason Wall Street doesn't want this is they want people's money in the 10 trillion and the 5 trillion and the 50 trillion dollar pools of money. It's all greed. No DTC. I would say no SEC either. This exchange would not be subject to the SEC or FINRA. Because I agree with you. I think they're corrupt. This would be its own separate. Maybe it'd be inside of the Justice Department or the. I don't know. Put it inside of not commerce. It's got to be in a legitimate, honest department. But I would just call it Department of Fair and Transparent Over-the-Counter Markets or something. But that's what I would do. It's got to be from the top. It's got to be a conscious decision to get away from the corruption that has created this based on the guys like Kenny G and I think Secretary Rubin under Bill Clinton, but it just incrementally over time, they've built a system that helps a few monopoly agglomerators of assets, and it whacks out our whole world. That's where DEI is and wokeism and all that. It's just, it's got to, you're never going to change it. So the one way to start is to come up with an honest market. Now people are going to say, well, there's not going to be enough money. You need this, you need that, you need speed, well, screw it. Go, if you need all that, go trade elsewhere. But this would be a place you could trade your private placements. I think disclosure would be important, obviously, but I don't think the securities laws based on disclosure is enough. I think the department would also have to build in that deals are not built to fleece. They've got to at least be a level playing field, and it's got to be fair. It can't be like a casino. The problem is you can't legislate out human greed and what attorneys are going to come up with. So you got to keep it kind of simple too. But I don't think in any measure these toxic financings should be legal. They've got to twist themselves like a contortionist to even present this as being reasonable, and then to hide behind the disclosure laws. I think it's inexcusable. Absolutely inexcusable. Justin Babish, the UAE and the Saudis both have investment funds that put their money into Western growth stories that they like as something to participate in. That's true. I don't remember if I met the broker or if I met someone that knew the broker, but there was a investment fund, and I want to say it was the KIA, the Kuwaiti Investment Authority. And this broker just cold called on this office, and I think it was in London, but it might have been in New York. Just knocked on the door, cold called, and he became the biggest broker because they had set up this fund. But I've dealt with the Qatari. I don't know. I forget if it's called the Qatari Investment Fund. I don't remember now. I have dealt, and this is so long ago, with the Kuwaiti. That might be where I heard the story. It's a long time ago. And then, of course, you're right. The UAE, I'm very good. A friend of mine ran the London office of ADIA. That's the Abu Dhabi Investment Authority for years. And I haven't seen him in a while because I haven't traveled. But he's a very dear man, very gentlemanly, and I miss him. But I used to go sit in his office, and pretty impressive. But Adi is a big name, and of course the Saudis have a investment fund, but they have a lot of different funds. It's not just. I went in. Anyway. I won't tell you all the stories. I went into quite a few of the Saudi concentrations of wealth a long time ago. And my friend in my old office has a lot of those accounts now. So I'm well aware of all of it. And you're absolutely right. It's called the petrodollar, and it's the recycling of, if oil is sold in dollars, where are they going to put that money? Well, they put it in the United States. Of course, there's arms. And what do they get for it? They get the security that the United States offers. Well, we've gone off the deep end, in my opinion, and I'm too tired, I'll say something wrong, but I don't know what's going on with our country. It may be that Trump's trying to break the city's hold on the world. It may be that he's trying to break down the whole edifice. It may be that the banks have told Trump that they're over leveraged Maximus and they need the assets of Iran and Russia in the Western banking system. This may be the last knockdown fight of our financial empire. I don't know what's going on. But what's happening, they're now going to merge the Ukrainian war with the Iranian war, and it goes back to Mika's father, Brzezinski. He wrote some book about the great game or the great chess game or something like that. I never read it. I've heard about it. And it's all about how we've got to block Russia and China, and the Ukraine's is a big chess piece in Iran. And we're, I don't know, it's this idiotic thinking that's going on, that's prevailing, and we've really got to wake up and change it. But anyway, for now, the Middle East, a lot of the Middle East earns their money in dollars and they reinvest it in the United States, and I think it's great. I think we should be friends. I think my experience in the Middle East has always been great, but I don't know why we stick a thorn in their side with, I mean, I guess there's a biblical reason to have set in the 1948 47, whenever Truman signed it, the UN, and created, with a stroke of a pen, Israel. And maybe there's a reason they have to be in the desert there. But there's not a lot of countries in the world, and you might be able to call the Vatican that, if you call it a country. There's not many countries in the world that are set up as Baptist or set up as, what's another one? I don't know. I'm so tired. Another one like I mean, there's the Asian countries where there's a lot of Buddhists and Hindu and all that, but you might argue that there are countries that are Muslim. You certainly must argue that. Saudi Arabia, Iran, and others. So you must argue that. But is it worth it? I really, I know the New World, America, the United States of America doesn't appear in the Bible. I guess it doesn't. But rather than all this fussing and fighting, my friend, why don't we, I don't know. There's got to be a desert in the United States that would fill the bill. And just, you know, just take the. I think Israel has had almost 100 years, I guess 90 years, to make it work and get along. Instead, they want more and more and more and more. And maybe that's tied into that the Palestinian Arabs objected to Menachem Begin and his machinery in the Nakba, driving something like 700,000 of them out of their homes, and hundreds of, I don't remember the exact number, hundreds of thousands killed. Olive groves that had been there for thousands of years bulldozed, whole cities obliterated, and they didn't take it and accept it. They weren't pleased. So maybe I don't know, it goes back and forth. So, you know, obviously Israel has the right to defend itself, but it would seem like and we did it too with the Indians. So I'm not judging that, I guess. But it would seem like as the world is modernized and we've gotten away from colonialism and maybe away from the British model, if they can't make it work and they have to attack, of course there's wealth there they want, but they have to destroy Gaza Strip and the West Bank, attack Syria, attack Lebanon, go against Egypt, but now I guess that's settled for a little while. Now they want to go against Turkey. They want us attacking for them in Iran, Iraq. I mean, come on, you can't get along? I have an idea. Every single Israeli citizen is welcome in the United States. Bring the whole thing. Bring the Knesset. Bring the whole thing. We'll set up. If you want a country, maybe we'll give you part of a state. And then slowly, maybe we'll make that a country. But I think we would open arms. And there would be no shooting. There wouldn't be no, I don't know. But instead, we're just going to war over some concept of something that happened 3,000 years ago. And it's going to start getting really expensive for us. And one of the things, going back to your question, is I think eventually, and I now think it's going to be very rapid actually, oil's going to be priced in something else, and that petrodollar that gets recycled in the United States might get recycled in India, recycled in the Middle East, recycled in Africa, recycled in Egypt, recycled in the Saudi. I don't know. I don't think we're going to disappear, but we got to wake back up. But yeah, you're right. Those big funds are there. Neil Gondek, good evening, Bill and RT friends. Hope all is well. The fourth wall alive. The fourth wall alive. Henry Winkler, I love you on Happy Days. Well, there used to be a bar in London on Old Brompton Road, I think it was. There's Brompton Road and Old Brompton Road, called Janet's. And Janet's was a popular place. She was from Chicago? Anyway, she was American, obviously. And she would free pour. A lot of places in London, they would measure everything. She would free pour, so that made it popular. She was friendly. It wasn't very big, but it was nice when you went into it. And if you became, if she liked you, and it wasn't just if she didn't have to know you, maybe she liked you that first meeting, but everything had to close at a certain time. I forget what time the pubs closed in London. It wasn't midnight. It might have been 10 o'clock, might have been 11 o'clock, bells. Everybody's got to go. So funny. They drink at lunch and they, but then they shut down early. But she would close the doors, and if she liked you, you could stay as long as she wanted, stay until 2 or 3 in the morning. And I was one of the ones that she let do that. I didn't do it all that much, but on the nights that I wasn't going out with my friends, I would go over there. I don't remember that she served food actually right now. So you could bring food in, or she had, anyway, I would make a night of it. It was fun. But the point is she was very good friends with Henry Winkler. I don't think I have any pictures of him with me or not. But I spent many an evening, many's probably too big a word, but yeah, it was probably many. It probably wasn't a lot, but it was probably somewhere between 3 and 5, maybe 6 times. With Henry Winkler. And it's not like I sat and had really long conversations, but I did talk to him. And he's a very nice guy. And I wish I had gotten a picture or gotten a way to contact him. But I was younger. It might have intimidated me a little bit. But anyway, it's interesting you call me Henry Winkler. He was I was really glad I met him. And I didn't want to, I think he was there so he could just be accepted and have an experience without being the famous guy. So I didn't, and we didn't, it was actually before your phone was your camera. So that's how long ago it was, really. Or maybe the transition was happening, but the cameras weren't that great on the phone. Anyway, I didn't ever try to get a picture with him. But it's one of my lucky memories. And like I say, he's a really good guy. He was interesting and down to earth. I found him. There was no jukebox, so he never changed the music. But anyway, it was interesting. The fourth wall alive. Say something wrong. Tell me something good. I don't know. I probably already did. The fourth wall alive. Remember when you and I were young men and old men would say it's all rigged and we thought they were crazy? Now here we are. We can't win. We can only recognize. Actually, when I was younger, I don't think it was rigged. There were some aspects that were, for example, syndicate and IPOs, it really went to the hedge funds. And the hedge funds, I had 2 or 3 clients that were hedge funds, although I didn't do syndicate with them. One in San Francisco and go visit. it was just free money to them. It was just free money. And there was also an aspect that and I forget what it was called, Reg G, Reg H, Reg F. But there was a safe harbor that if you were offshore, you could trade against the IPOs. It was amazing. But you had to be not a U.S. citizen, and it wasn't as big a thing. Now it's run rampant. But I don't really agree with you. I think rules were really strictly enforced. Compliance was enforced. And that's why when I first got to know Ham and got to know his strategy, it made sense to me that these buy-ins could occur because they used to. But I think we've educated ourselves by now that unless the rigging also happens on the buy side, it's highly unlikely that there's going to be a short squeeze. Even if you track the numbers and come up with the huge potentials. And anyway, I think it's much more, that they're overwhelmed or something. But I think it needs policy change. And I think it goes all the way back. People would argue when it goes back to Reagan, when he started to break down at Wall Street's request, that banking was state by state. And they came up with, and they asked our clients and us to make calls and write letters so that CDs could be federally insured wherever they were issued. And then Merrill Lynch could trade them. And it was a great product. But that was the start of breaking down a lot of the walls. I think George W. Bush, the savings and loan crisis was corrupt in the sense that they took out the good savings and loans, they wiped them out, and they gave the assets to the Bass brothers and friends of mostly Republican donors. And they never really fixed eventually they did, but they didn't focus on shutting down the crapola ones. I guess that was corrupt. And then the Mike Milken time, his whole, I guess you would call it junk bonds and green mail, although green mail that was also a strategy that T. Boone Pickens and Boesky did. So it wasn't, but the point I want to make is what Mike Milken did, all the firms did. All of them. They just, he showed them how first, but I think, did it better. And I think, I'm trying to remember why it came to public light and why it blew up. Was there a bank? Was it the one in Chicago that blew up? I can't remember the name right now. But I think Wall Street made him the fall guy. I don't know if it was as corrupt as they say. I really don't. But they made him the fall guy, and they kept doing it. I think the gutting of American industry by funds like Mitt Romney's and others got out of hand, and it continues to this day. The idea that private equity can come into Red Lobster or come into Southwest or come into, and some by borrowing a bunch of money against the company's assets, paying themselves off, that they then can somehow re-engineer the company and make it better. I think it's absurd. But is that corrupt? I don't know. There were the over-the-counter firms like First Jersey Securities, and there were some others that they did abuse, particularly on the long side and with CEOs. And I still think today that's what the SEC is trying to go after, but I don't really know that it exists that way anymore. There were bucket shops. There were some brokerage firms that didn't have a great reputation. But overall, I found everybody on Wall Street honest. Overall, there were some glaring exceptions, but yeah, I don't think it was all rigged back then. And you could follow the tape and make money. I don't think you can do that anymore. And I spent a lot of my young years with older men back then because, I worked hard. I was trying to learn. And so there's part of me that feels kind of missed out on being that young guy in my 20s. But I wouldn't trade it. It was Merrill Lynch particularly was a great experience. And I often wonder what it would have been like if I had just stayed there. I don't know. But we couldn't churn accounts. We couldn't do a lot of. I think what Kenny G does is churning. We couldn't do any of that. And if you tried to do anything, there was a lot of oversight. So, but I agree with you. Can we win? I think we can win now. You just can't. I think overall that people think the market is the way it used to be. It's not. Friedman's NASDAQ is but a faint shell of what it used to be. The over-the-counter is a laughing stock. That Charlie Cromwell. And I even think the New York and the rest have been bastardized. It's that's what you have to know. What they want you to go is into a brokerage firm, give your money to a clerk basically, and she'll allocate it to a couple of advisors, or he will. And it's frustrating. But I think there's a lot of ways to make money. And I think you're about to see it. I don't know if it'll be in the next 6 months, the next 3 years, but I think there will be a revitalization of a lot of industries in the United States. And if somebody can crack the code on how to provide honest financing, honest investment banking, and honest market making, honest price discovery to lower smaller projects. And by the way, they're not that small. Sort of anything under $1 billion or maybe under $5 billion. I think there'll be a lot of money made, a lot of money made. But the greed on Wall Street's massive. And you got to think, you're right, you got to recognize and you got to act. And you got to, I think you got to build your positions before others see it. And when things get, I mean, this recent silver thing, for example, I had somebody anyway, it doesn't matter, but I felt like if somebody put a lot of money in that gold company I talked about at the beginning, that they should also buy an equal amount of silver at $20, $25, maybe 30. None of it ever happened, but if that plan had followed through, silver went well over 100. But then that everybody's talking about it, and then I'm uncomfortable buying it at 100 or buying it at 90. But it would have been a nice thing had I been able to, had it happened, the entire investment made would have been met by selling part of the silver, and it would have. But anyway, the key is to get in while nobody's essentially looking. Trust your due diligence. And when everybody's looking, that's probably a good time to take some of your profits. But it's certainly, when everybody knows about it, it's not the best time to invest. So that's the fourth wall. We get older, wiser, and exhausted, sir. Yes. I don't know your status in life, but I think as men get older, particularly if they're married, grandparents or whatever, I think men are intended, maybe when they're younger, I forget the 4 roles for men. One is protect, one is to lead, one is to provide, and one is to mentor or teach. I think those are the 4. And as you get older, past a certain age, I think your role is not so much protecting, although you can with your wisdom and all that. Yeah, I don't think it's necessarily so much I don't know. Leading might still be there, but it's certainly a different kind of leading. And then providing that actually, whether you have money or not, it actually becomes that's the younger man's role, maybe. But the one thing I think we have left that is an important role is teaching and mentoring and guiding. And I don't think we do enough of it. And I don't think society respects it enough. But I think if you can do that and let go of some of the competition of your younger years, I think you can actually live a life where you're not exhausted. But I do agree with you. It is exhausting. I think there's quite a bit of mass psychosis out there, just not thinking about some of this. And I think our financial markets are out of whack. And I think that it's a sign of extreme financialization. I mean, are we really the wealthiest country? Have you? I used to, with my friend, we would get in a cab from JFK when we landed and hurry downtown to meet someone. But we drive on all those roads, and he'd use a very descriptive language, but he'd say, you know, F this, F that. He said, you call yourself the world's, and he loved America, but he said, you call these roads, these potholes, it's all, that's what financialization does. Everybody thinks they can make a fast buck day trading. Well, that didn't really exist before. And I think it's a sign of an end of a period rather than the beginning. And I think it's a sign of an adjustment coming. But I think it will get easier. I get exhausted because some of my references are downright funny and no one gets them. No, I'm just kidding. Yeah, it's just different. I think somebody said it, but I actually said it one night years ago. I had a friend that was very down, very beautiful, but very down. And she didn't drink, but we went to this, the Bottom Line, as I recall. It might have been Sesto Senso, but it doesn't matter where it was. And I just said to her something like, you know what you need to do? We all need to do? We all need something to do. We all need something to look forward to. And we all need someone to love. I said that. I've heard it since, said similar ways. I had never heard it before. I thought I made it up, but maybe I had heard it. But I think that still applies in old age, that you have to have something to do. Maybe you don't have someone to love, but you can try to show love to those you meet. And you do have to have something to look forward to occasionally. It's, but I think it becomes less dramatic, And I used to make, not that I made fun of, but I used to watch my stepmother's mother in her just absolutely beautiful love of her faith. She always had things to tell me like, Billy, love and forgiveness, Billy, love and forgiveness. And I'd say, okay, Mrs. Kelly. Or she'd say, what was the other one I always, oh, the human frailties of people, she would say. Oh, the human frailties of people. But I was young and I was thinking, it didn't fit in. But my point is, now that I'm older, and I've always done it. It's not new to me. It's not like a sudden fad or something. But I think one thing when you're older that you can also do, as I think it was Lucinda Williams sang in a song, getting right with God. Might have been Jillian Welch, but I think it's Lucinda Welch. Anyway, you can do that. And that, I think, to the extent that you can do it a little bit each day, it doesn't have to be a major campaign, but if you can show kindness or recognize even in the one thing when you're older, you realize no one was ever watching anyway. When you're younger, you always think people are watching or judging it. By the time you're older, you realize no one's watching anyway. And you don't have to hang out. You don't have to get engaged in the back and forth, the competitions that you used to. And you can actually try to help people. You don't have to be greedy. You don't have to be, the problem is on this planet, you do need money. You do need security, so you can't be unreasonable. But anyway, I think maybe that's one answer, is looking at those things, that aspect. I think for me right now, the 4-wall life, I think I'd be happy. I miss my house and I miss my dog and I miss being able to have people visit. I don't know if I'll ever get that again. But if I could get something like that again, that would be, I would feel less exhausted. Yeah, I don't know. We do get older. I'm not sure we get wiser in my case, but I guess we do. I guess you're right. Exhausted. Yeah. I tell you what, I don't know. It's already 1 a.m. I haven't eaten, but if I had eaten, I would have already wanted to go to bed. So you're right about that. But I'm glad you're here. I like your perspective. I went to a physical therapist, I don't know, a few weeks ago. He's a very nice man. But I forget what I said. I might have said, you're the Mick Jagger of physical therapy or something. And he looked at me and he said, who's Mick Jagger? It's weird getting older that way. Most of the people I looked up to in my family are all dead. My stepmother's still around. I don't see her much. And I have one uncle who's deaf now in Florida. And I always looked up to him, but he's so young. And he had a lot of difficulty with my mother, who didn't. But I haven't seen him. I'd like to. And then I have one aunt. I have one aunt on my father's side, and she's just wonderful. But I don't know how much more time. So that's exhausting too, is being alone. You know, I don't know what the answer is. I think it's probably trying to help people and trying to recognize you can't do everything and letting go. And I think the biggest secret of all is getting a puppy dog. And someday I'm going to get a puppy dog. There's nothing better than a happy dog. Nothing. So, I don't know. It's you have good observations. The fourth wall alive. I'm now a fan. Love the pub story. Subscribe, sir. Okay. Yeah. One time I was at that pub. I had a flight in the morning, and where was I going? I think I was flying to Dubai, and I don't think I had packed, and I think it was an early morning flight. I think that's what it was. Whatever. It was a long flight. I hadn't packed, and I'm at that pub, and wouldn't you know, I met this. I was younger, but I met a beautiful woman, and we hit it off. Oh my gosh, we hit it off. And we back then I would buy, whatever. My friend said he always had a swear word. He's, oh, you don't have to buy. But anyway, we had a great time. And so it stayed late, and Janet would always go shh, 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 because everybody'd start talking and get lots of shh, shh, and it goes and shh, and then I think it was that night that somebody knocked, a cop or something, a constable. So Janet said, "I've got to close up. I can't." So it was like, I don't know, it was 1 or 2 in the morning, and this woman asked me to come with her to this next party. Of course, by the time we got there were guys that knew her or something, and but I stayed up, and it was fun. It was London. I stayed up, oh my gosh, that whole night, and then I had to take a cab, pack, and get to the airport. Oh, what a night. But I still remember it. And it all started at Janet's. But I don't know if I can do all that stuff anymore. The fourth wall alive. No one was ever watching anyway. You know what's funny about that? Everyone always tried to tell us that, but in the moment, we never recognize it. And when we do, no one is now listening to us. That's true. That's true. That's true. And it makes you think. These things we go through, it's not new. Maybe everybody goes through it. And what's interesting, it's happened before in history. We have all these modern gadgets, but human behavior doesn't change much. But you're exactly right. People did tell us that. People did tell us that. My dad had all sorts of advice I didn't listen to. You're right. And you're also right, no one listens to us now. I stopped giving advice unless I'm asked, but that's not always true either. That's not always true either. I don't know what the answer is. Nobody gets out of this life alive, my grandmother used to say. Fourth wall alive. Get a puppy tomorrow, sir. I will, but I think I'm going to be traveling, and I think I want to be established somewhere. But I do want to get a puppy or animals. It'd be nice if I could live somewhere where I had. It sounds like a luxury. When I was a child, we had it. You know, when I was young and when we lived overseas. But um, it's not something I asked for. But I think it'd be great if I got a dog and I'm still traveling. I haven't in a while. Is that if I had either a live-in maid or someone that stopped by and I had extra rooms, that I could leave my dog with her, or have a dog walker stay in my house, which is something I used to be able to do, have the dog walker stay there. I'd like to get that kind of establishment before I got a dog, but I'm very blessed when I'm gonna, I'll sign off here shortly, but I'm very blessed that when I go out, even though I don't own a dog now, I'm really blessed that a lot of dogs respond to me well. And I don't know why. Uh, Not all of them, but there's nothing makes me. I walked the other day. Some people, like, I saw a great dog today that wanted to say hi. I said hi, sweetheart, but his owner, she didn't want anything to do with it. And I realized that you can't just go to a dog without the owner's permission. But I think it was last week I was going through the park and there was this wonderful dog. It was like a pit bull mix kind of dog. And she had this big smile. She's looking at everybody. And I'm walking and I'm in a hurry, but I saw her and I said to the owner, "Can I say hi?" And he was great. He said she would love it. And of course she jumped all up and it was awesome. There was another dog. Um, I guess that's just 3 or 4 days ago. His name, I think, was Bitters. And the woman that owned the dog was a nice dog, a woman, very nice woman. She wore a T-shirt that said something like, "I'm not part of the patriarchy. Down with the patriarchy." I kept my mouth shut on that. But what I saw, I was walking, and this man walked up on the sidewalk, and he literally walked around away from that dog. And I watched the dog. It hurt the dog's feelings. And I came up to the dog, uh, sort of a copper color with white. And it was another, I think it was a Staffordshire Terrier. And she let me say hi to him. He was so fantastic. Oh, it made me so happy. I thanked her. And I asked her what kind of dog it was. And she said, "Well, I think it's a boxer mixed with a hound dog." And I remember when I used to describe my dog as maybe a boxer mix. I thought I saw it, but I never wanted to say pit bull terrier mix because that's what they say at the pound. I do think my dog was a Staffy though over time. I think it was a Staffordshire Terrier. I think her dog was a Staffordshire Terrier, and I told her that. And she said, "Oh, you think so? Well, I said, "It doesn't matter. He's beautiful. He is a beautiful dog." And he had his ears. Anyway, my point is, until I get a dog, I'm very lucky to um, almost every day I meet a dog that fills me with happiness. And that's what you got to do. The fourth wall alive. There is no answer. We're just here doing our thing. Somewhere along the road, we just become the old people. And far more quickly than we ever thought it was going to happen. Absolutely. Absolutely. It's disorienting. I my biggest example of that, I don't know if you can see it, but I go to this conference every year. I've probably gone to that conference for since it began. I think I've only missed 2 times, maybe 3 times in 30 years. And once was because a client invited me, um, you know, to I don't know what you would call it, Turkey or Greece. It was very nice. Another time it was a client too, and I think another time I didn't have the money or I had a competing trip. But I've always made the effort to go. But when I first would go, I was young, I was intimidated, and pretty much I was the Yankee, and I was the only Democrat. Every now and then they'd be another one. And I think it was it was about 4 years ago. I realized I was that old. I'm the old one now. There's a few older people, but I'm in the category of old. And what's weird is there's a lot of Democrats. I'm not Republican, but I don't go along with. My views have changed, so I see it. I see what you're talking about. All of a sudden, you're old, and it's like, when did that happen? When did it happen? And of course, it happened one day at a time. And I've advised people, and I wish I could have advised myself, but the best friend you have in old age is your younger self. But you can't. My dad always warned me, you can't make all your plans. You can't get it just right. Just as you get it right, somebody's going to come along and knock it down. You have to just go about living. And I I had this girlfriend, really, I did. She used to tell me, life isn't a dress rehearsal. Well, she lived it pretty hard, but I look back now and I wonder, did I do all the things I could have? But the thing is, when you get older, it doesn't matter what life you lead, you're going to have the same things to deal with. I like people who are happy in their old age. And I think we each can do that. But I don't know what the answer is. I don't know my point. It's nice getting your perspective. And I think you're right. There is no answer. There is no answer. So maybe I'll leave it at that. Anyway, it's nice meeting you, the Fourth Wall Alive and Fourth Wall Live. I hope you come back. I'm going to sign off because it's 1:31, and hopefully I can come live on some of these issues tomorrow. I was fascinated that Finger Motion had the huge rally. I'm not surprised. I'm also not surprised that Martin went. To me, it's just the strategy acting out. Others see it, I guess, more that it's benign. I don't. I think it was a strategy to close out maybe the Anson funds, but doesn't matter. I don't have to be right. We'll see what Finger Motion stock does. It can go up, and it can have good news and it can have a big rally. But you got to ask yourself, do you feel lucky? Well, do you, punk? Are you going to trade it properly? And with Railtown, and there's other stocks out there, but with Railtown, I really don't think you have to trade the stock. Now, I'm not saying diamond hands, but I think it's entirely plausible that once you're in Railtown, you may not want to sell ever, or it's bought out. But I really think, and I'm not diamond hands, we have to pay attention. But I think if you're in finger motion, what happens if it goes to 3 or 4? You're not going to sell because you're going to say it's going to go to 7 or 20, and then it'll crash one day. I don't know. I don't know what the answer is. But anyway, all right, Fourth Wall Alive, thanks for this conversation. I really enjoyed it. Well, I did too. And, you know, another friend of mine said, she's gone now, but she said to everybody she met, including me, she would say, I've been young, but you've never been old. That's what she would say. I've been young, but you've never been old. I don't know what it meant, but anyway, I always remember it. And she lived life to the fullest. Anyway, peace to you, the Fourth Wall Alive, and peace to everybody out there. We'll catch you on the flip side. Thanks for staying late. Cheers.